Good morning. Happy March, everybody. Welcome back. Another Monday. Morning. Another Monday, we begin the dance again. We pick it up where we left it. Back to the grind. Exactly. Let's start at the top. Futures. Up across the board. What's doing the best? Value. Small caps. Leading by a full almost percent, pulling back a little bit leading into 30-minute mark here. Russell 2000 absolutely blown out of the water. Again, to be expected, which is why we trade. We trade with price, not on ideas or fear. When we know what the fear is signifying, right? What happened last week? Big spike in yields in the bond market. Was there some economic event that caused bond yields to rise? Or was it more technical? And every single bond desk in the industry got the same signal and had to sell at the same time. And since we know that there's a liquidity problem in the bond market, it caused a spike in yields. That was more likely already in terms of probability to begin with, considering our story of reinflation causing value to be the hot commodity in the market. Not real commodities, but commodities as well are doing well this morning, coming into the day. But we knew a lot of the facts behind the move, and we knew we were expecting a move before the move happened, right? We were very aware of the possibilities of that happening, and we have actually been trading for that event for at least a few months, right? Since at least the November presidential election. Since over here, November 4th, when we went all in on value, and again, I don't like to use the all in word, but at least a very different mindset. We had an understanding that value was going to be really a leader because of how much, really, with the value word, almost it was the value in the market. Not just that it's a value sector, or we understand it as an entire sort of community of stocks out there and sectors. It actually had the most value. And growth had already given us so many points, and growth continued to do well, right? The market as a whole, equities continue to gain, and again, that risk-on mentality continued to be the forefront of every desk out there. But again, there was an understanding that this idea of value itself doing well, small caps coming back, everything retracing, was because of a reinflation idea that the economy was going to get going, was going to get hot, and there was an understanding once bonds, that 10-year passed the 1% mark, there was a very clear understanding then in the idea that we were not prepared for some sort of yield rise. I talked about it that it was most likely going to be the other way, that the reason why bond yields would spike and there would be a liquidity event was because of volatility spiking, because all we do is short the VIX, right? All we do is short volatility all the time. Since 2008, that's what we do. And when these spikes occur, it can be an outlier that causes a liquidity event. And we've talked about this. Was that what happened here? It wasn't so much tied to volatility at all. There was an understanding that there was higher volatility than we can see here. And again, volatility isn't just the spot VIX, right? I mean, everyone understands that, of course, but volatility is not just the spot VIX. That's the reality, right? There's so much more to volatility than just here, right? You can't always compute it because all this does is goes after S&P futures. The only time that the VIX actually trends and leads to higher volatility, besides just a spike, right, in the way we understand it, is when hedging is involved. When there's considerable hedging, what we get is a very clear, first of all, a very clear elevation in terms of lifted supply. And again, supply being a little, not being so much buyers or sellers, but a supply in the value, elevation, and then a trend into the event until eventually, here's the presidential election, the most heavily hedged event ever, right? The highest price to hedge ever for an event. And you can see how it led into the election. Here is the actual election day right here. So again, it tapered off right into the election, and that was it, right? That's the only time we get that. Did we get this over here? No, because it was not an economic event. It was a technical event which we understand as being a bit sharper, shorter term. And again, you don't know until it's there. And you all get the same signal at the same time. So every single bond desk get the same sell signal at the same time. And there's nothing you can do to stop that. There's nothing you can do until you make the move. And so what happens? Overselling occurs. Overselling, shit spreads, and there is no model that you can protect yourself. All you can do is you got to do what everyone else is doing. Hopefully you're a little bit faster. You're already assuming going into this that you can trade your way out of it. And then what happened Friday? Everyone just said, okay, that happened. Is it an economic crisis? Is it an event that's going to cause some sort of significance? No. And so what did we do in the equity market? Well, we basically bought a bunch of shit. I think a direct quote in chat was, just shut up and buy value. That's probably the best thing you could do in most occurrences, but it was certainly very true on Friday. Just shut up and buy something. Buy value. Just buy it. Just shut up. The amount of back and forth in here obviously causes, ooh, yay, I'm happy, and ooh, now I'm sad, and oh, I don't know what's going on. You don't know what's going on if you're not paying attention. If you're going to trade equities, you need to be aware of every other market out there. For the smallest of trades, you want to go buy options, deep out of the money options, short terms on some godforsaken company. You have to know what's going on in the broader markets, bonds, currencies, the volatility markets, commodities, understanding Bitcoin. All of these different facets of markets have very large and sometimes demeaning implications for your trades, and they're very important to understand. So again, the only way you're going to be able to do this is to be aware of all of these. Now, you can get away with some things, right? Some of you don't have time for all that. You got to stay in your lane then. You got to stay in your lane. And when are you getting your opportunity? This is your opportunity. It's very hard for people that do not follow all the macros to trade with momentum. And yes, it's very easy to be trading with momentum and just hoping price continues to go up. And sometimes it works. And so that carries you through a market, and you could have got away with that over the last year or so, right, since COVID bottom. But then these are your real opportunities because it's a very simple idea. You buy on a pullback in support, and the points you're going to get off of this, the points that most of you just got from Friday into Monday today, are going to be trades that double up that position, right? That's the reality. And that's a big difference from just trading with momentum where you're getting a few points every day and you're risking it every single day. The risk here, what's your downside risk? What's your downside risk of buying on a trend line here of support? That the market crashes? That's what you're going to use as an excuse of why you didn't buy every fucking time? That's where some of you go. Some of you honestly go right to the, well, I didn't buy there because it could crash. Okay. I mean, what is the probability of that compared to just price maybe being break even or up a percent? I mean, you can't go look at this. Where is what are we going to get, fucking super COVID 5.0 from over here, like back in here? Even if we did, do you really think we would, this would happen again? We would just crash 30%? Is the market really going to do that? Or have we been in COVID for like a year now and it literally doesn't matter? We have a higher correlation to deaths leading the market higher. And we've basically proven that the more deaths there are, the market rises. And when the deaths go down, look at the market went down. I mean, you might as well just say the market's correlated to the amount of people that died of COVID, because as soon as the deaths started going down, the market went down. So you might as well use that as your probability. Otherwise, you're just getting it from movies. You watch The Big Short one day, and now you think that, well, you know what? This is the end. I better pack it up. Unfortunate that I just got my greasy fingers involved, and now it's over. No, it's the same every time, guys. We buy this pullback every time, and it's not really a risky pullback or anything. It's just you're putting headlines together and trying to piece a story, and then you see a lot of new things that you don't understand, so then it becomes a little even scarier. That's not what happened, and there's a reason why the market looks the way it does, and how that bond event translated into so much stability and understanding and rotation because everyone already knew what they were doing. Everyone already knew. Everyone knew that if they were selling treasuries, they're going to go into value because it's the same concept. If you're selling treasuries and everyone getting the sell signal because of inflation, then there's only one place you're going to go. There's only one thing you're going to do, right? Now, there's one thing that could cause, or has in the past, if you looked at some historical context, caused fear when bonds get going, in volatility gets going on bonds. And that's this. I'm sure some of you saw the quote from last week, coming from the whole bond vigilantes idea. I'm going to post the quote here. That's from James Carville. That's from, let me type in his name, James Carville. I think it's got one L. So that quote right there, you can read that quote real quick. I'm sure some of you have seen this quote. So he was an advisor for Bill Clinton in his administration back in the 90s, right? And he came out with that quote. Now, this is a time, mind you, when we haven't even thought of QE yet. We haven't started QE yet. The central government, in terms of the Fed, didn't really have the power to control the market as we understand it today. And so there was this idea of bond vigilantes in the market that if monetary policy sort of took a turn to heat things up and prop things, this idea of propping up, then what would happen was the bond market would just start selling fucking bonds. Like fucking Batman and Robin entering the market to say fuck you to the government and say no, because again, remember what happened in the 80s and the 90s? The bond market was the fucking king, right? There was no other place you could make money like that. Now, it still really is, but it's obviously we've been much more risk on in the last fucking 13 years, 12 years, 13 years since the financial crisis. So it's a little different now, but I mean, bonds are still the big boys, right? They are the big boys. And so during this time, all we could talk about was this fucking market and how big and impactful they were. So yeah, as soon as the government would try to get involved, you would have these fucking Batman and Robin types out there selling all their bonds as a middle finger to control federal, monetary policy. Now, that doesn't happen anymore. And so there was some ideas. I saw these quotes all over the place from a bunch of morons, right? And from, pundits and everything else, CNBC and everything else. And what about the James Carville quote of bond vigilantes? And come on now. Like, where are we? We're in like fucking kindergarten and we're learning how to, we're learning colors and everything. I mean, it's a whole different world. That to act like 30 years ago or whatever is any indication of right now is ridiculous. We have QE. The Fed tries to keep yields down purposely. We didn't have that before. The Fed is the big boy in the room now. That's the reality. There's a reason why all we care about is listening to every little word that Powell says. So there are no such thing as bond vigilantes. Try it. I fucking dare you. I dare you to try it. I dare you to go liquidate your entire bond position and see what it does. No one's going to give a shit. Nobody cares. There is no such thing as it anymore. And so it was not an economic event or an event that leads to something else. It was purely technical. Everyone got the same signal at the same time. A liquidity event happened in that very brief moment, and that was it. It stabilized on Friday. That was it. There's an reinflation idea. They're going to go into value. That was it. It's a $21 trillion market. Equity market's $30 trillion. Options market's even larger than that. Get over it, bond boys. Vigilante mindset, whatever. Anyway, today, that's what we got for macro ideas. Let's just jump over to the dollar real quick. Dollar still rising from this move here. Again, as we understand it, the reaction here is just because of the treasuries, right? When we ask ourselves, okay, why is the dollar rising here? Well, a bunch of treasuries got sold, and so there is cash rotating elsewhere, and so the dollar does get pushed. And of course, borrowing costs do go up because of the yields, and buying back treasuries is going to cause If Europe is buying back into treasuries, Asia's buying into treasuries, these are going to cause the dollar to increase a bit here, right? Until it comes back down. We'll be watching this move. Of course, if it comes back up in here and there's some sort of volatility event, then we would understand that as being risky. As of now, we understand this as being a risk-on move, sort of just like over here. And now if it comes back down, we understand that's even more risk-on for specifically just in value. So keep that in mind. In terms of the spot VIX, again, we just saw it a little earlier. Continue to push down. Again, we buy up here. One thing I thought about, a good way to sort of give it to you guys is that, I talk about buying when the VIX is high, selling when it's low. The reason being, of course, that it's just a quick spike and it's going to come back down, right? The fear is there for a moment and then it goes away, right? You're only scared for a moment. It's like scary movies, right? You're not scared for the whole fucking thing. You're just scared when the jump scares are coming. These are just jump scares, right? All it is a jump scare, and you just need to take advantage of that moment. When others are scared and fucking up, you stay composed and you do what you need to do, which was like on Friday, just shut up and buy something, right? And so again, in here, the way we use, you can understand if the volatility is going to continue or not, because it will trend, not do this, right? So like I said earlier, we will know when there's a real volatility event, and usually we know months before anyway, if there's one coming up, because the hedging starts early. Yes, the hedging, everyone waits till the last moment, but it doesn't mean that we don't know beforehand that that's going to happen, right? And so we can usually be prepared. So again, the idea of volatility here. Again, volatility is the whole market. It is the whole market. What are we looking at right now? That move towards the upside. Everything here signals an even larger move to the upside, just like it would to the downside. But are we getting the downside move? No, we're not. We actually have a lot of fucking cash out there. I don't know the exact figure. I don't think anyone knows the exact figure coming into this week. That's a bit of a problem. You're probably talking about $1 trillion still of cash out there that was just recently invested, and it's going to be going into market somewhere. They're going to be buying back into yields or back into treasuries. They're going to be going into the equity market, full swing into value. If we just take a look through Asia and Europe real quick before we look at individual tickers, of course, this has a lot it can be bought back into on the Hang Seng. Again, our focus in terms of Asia is that it's very tech oriented. So also, Japan being very heavy on tech, these are bouncing back. They're going to have a lot of, there's a lot of possibilities to buy here. I think when you think of where we are right now, when we first came into the value idea, I talked a lot about emerging markets. And so you think of not just the Hang Seng as the big boy in the room right now. You think of all the emerging markets, like when we were trading Brazil, trading India, right? Japan obviously being tied over here to the tech idea. Those are all areas that you can pick up some points because of just what's happening, right? Just because of what's happening. As those desks try to reallocate those funds, they're going to be needing to find liquidity. Those emerging markets that haven't done as well for a little while, will do well. So again, those are possibilities. Those ETFs we've talked about, those are all certainly possibilities. So let me just see. Europe's up about 1% across the board. Now today we got 11 minutes. Excuse me. Let's talk about our markets. What are we trading, right? First of all, coming into the day, small caps value up the most, of course. Now, what exact sectors are we looking for? Again, energy and banks are continuing to be, as a broader understanding, a good benchmark, a good average. And when we're looking at this again, there hasn't been, even over here, there was no doubt in terms of the trend here, right? This is now up over 2.5% pre-market. This is the energy sector. If we look at banks up over 1.5%. The same idea here. Continue to push this trade. The point being, again, that this is when you look at energy as banks, they're sort of the slow mover in the room. They're sort of the marginal trade in the room. But if this is continuing to trend, it's a good benchmark to use. So we're going to use that with sort of when we look at the Russell, look at the Dow. This, again, is a good trade that we've been pushing. And then you've got the REITs angle, right? You've got the real estate angle. Of course, that's basically the slowest mover in the room that continues to do well. So pushing into today, REITs continue to be very good. I'm going to be introducing, likely, I mentioned it in my section, the channel, I'm going to be putting on a lot more lower volume plays, trying to set up sort of what you guys remember as sort of me setting up traps in the option chain. So some of those lower liquidity options, try to get a foot in the door, and then when the rest try to come into the door, I'm the only one. So you want to get in the door, you got to go through me. Try to be the axe on some of those chains. So some of those lower volume plays that likely will get points because of the value idea, we're going to be looking at. So keep that in mind. Something important that we talked about from Friday was semiconductors, right? So semiconductors, again, had been in a very finicky spot. If we look at something volatile like NVIDIA or something, right? Very finicky spot, understanding, well, what is this? Are we tying this into some value? There's a lot of supply concerns. There's a lot going on here. These are looking very good to start the day. I would say that there's also a lot of lower volume semis that we could get a part of. I'll release these lists like tonight. But so these ideas going again, we picked up all this shit on Friday. So before we go any further, those of you that are now like, well, what can I buy today? Again, now you're chasing momentum. So now you're going to be, quite a percent behind as everyone tries to buy. So if you're not buying within the first 30 seconds, first minute, and you're waiting, and then if there's no pullback, well, you're fucked. And then if you're buying too early and there's a pullback, you're fucked. So it's very hard to manage a trade. So yes, there's plenty of things that we need to be buying as the market goes here today. But again, this is why you need to be buying when that fear is there. Because now all of a sudden you're not scared because there's green. Well, that's exactly your problem, because you're part of that group that gets scared and everyone else took advantage of you. You can't then get taken advantage of and then be like, okay, what are we doing today? Right? You get mugged and then you go talk to your mugger and say, hey, what are we doing today? Can we hang out? That's fucking stupid. So again, you have to take advantage of what's in front of you, and if you don't, it becomes very difficult, right? It's difficult today. It is difficult today if we go very big. So you do need to be taking advantage of these pullback areas. There's plenty of charts out there, of course, to trade. But I'm just saying in terms of, you got to understand that when those moments are in front of you, you got to be able to take it, right? Just make a trade. Right? So again, semis, when we look across the board, there's things like TSM, UMC. Again, these were all entries on Friday. When we think about where they are and where they're going, again, all these are signaling all-time high, which is very important. When you think of a range of where these are going, the low end of the range is all-time high. That's the low end of the range when you think of volatility is the all-time high on almost all those charts. So when you just do the math, right, the volatility that has swung through these through this area and the idea of a convergence in the sector, you're going to get pushed. And again, entering Friday compared to today is a big difference. Whether it's 2% on the underlying or not, the difference is that to now pick up a position on the option side, everyone has already speculated past where it is right now. Everyone on Friday was speculating a return to all-time. So now you're going to be paying, we'll see. But a lot of those contracts are going to be up 50, 60, some of them 100%, right? It's going to be difficult. Doesn't mean you can't get the points. You just need to be a little bit more confident when you manage that trade, right? Things like X, obviously, never doubting the X play. It's important to remind yourself of some of the things I talked about last week of preempting moves. Sometimes you need to make the trade when it is a little tumultuous and scary, right? You got to be willing to. Every single Friday we put an X position on. It's not to say, well, just every Friday put an X position on. No, it's because of where it is, right? This is a pull into support. I know I have the line here, but this is a pull into support that we bought on multiple times now. We've done it multiple times. Here's a Friday. That's a Friday candle there. Remember buying that one. Here's a Friday candle. Remember buying that one. Again, we continue with the play that worked. Value tied into the economy. We know it. Travel. Airlines, cruise lines, casinos. Again, if you haven't been a part of the travel move, I asked you, why are you not a part of the travel move? Why didn't you just put it on the pullback from the weekend, for going into the weekend? You didn't even really need to do anything. You could have bought it any time. Those of you that have still not been a part of travel, because of your own ideas. Well, your own ideas usually get you into trouble. You got to just go with what price gives you, right? You got to go with what price gives you. All of these charts they've never signaled anything else, and we know what they're tied into as a sector. The whole sector's moving. You could throw a dart at any single ticker in the travel sector. 99% of them are going up. So it'd be very hard to fuck it up. Those of you that fucked it up, it's because you just waited and waited and waited. You bought the wrong thing. You're going to buy today at open. And then, again, these are you issues. These are your timing issues. This is you being a pussy. The motto coming into this year, the reality is you got to trust price and not be a pussy. Some of you are big fucking disgusting pussies, okay? Honestly. Some of you are grown-ass men that are scared to place a trade that you've already placed before, but you placed it before for the wrong reasons, and now when you have all the right reasons, now you don't fucking place the trade. You got to stop. You're a grown-ass man. You're a grown-ass man. What are you so scared of? You buy dumb shit all the time, rationalize dumb shit, and then as soon as there's real obvious signals, real reasons, you don't do it. Grow a pair and stop doing it. Just place a trade. There's nothing bad that's going to... The worst thing that can happen to you is that you get stopped out of the trade. Maybe you lose a few percent. You just got to do it, right? So again, these moves here, one thing that a lot of you forget is that a trend is support. And I know Viacom got mentioned a lot. These kind of trades, right? See this trend line in here? However you want to draw it. Uh-oh. Trading view, hello? Oh, there it goes. See these? See this in here? This is support. This is support. See how this is a one straight line in here? This is support. A trend line is support. If something's been trending and trending and trending, you can buy it anywhere in here. You can buy it in here. I know it seems sort of against what we talk about with buying on pullbacks or buying on breakouts, but this is buying on support. You miss it, you can always still get in there. And again, the more it's trending, the more likely it's going to go up. So of course, the sooner you buy it, the better, of course. But it doesn't remove the fact that you can go trade it, right? Keep this idea in mind because you have a lot of charts that still. I've mentioned the bank play, the energy play, and you guys just sit there and watch it. You're just looking at it. You just watch it. You go, well, that's not sexy. I don't want to tell my mom that, or my cousin Greg that I bought bank tickers. That's not very sexy. I'm going to tell him I bought fucking, I don't know, something stupid. You guys know what I'm talking about. I bought Tesla. I bought Tesla at the low, Greg. And to mention, the EV sector. EV is bouncing back. We need to wait for breakouts, okay? You need to wait for breakouts to travel to trade those still, right? We still need breakouts. There's Blink. There's all of these different tickers, right? You got to be patient on those, right? It's not the same as buying at the low on those because they're not exactly tied to value. They're not exactly tied to value. So, again, today, if you didn't buy anything Friday, I don't think I need to tell you what's going on right now. You can see it in the green. I know you guys get all excited. So the one other thing to mention was all of the Chinese tickers that we picked up, of course, opening very well to start the week. And a reminder that it's not so much tech. It's tied into more of a value idea because of China. So keep that in mind. Let's see what we get here. Looking at the S&P here, we'll see how this trades through. Again, tech not being as sexy as value right now. MP 13.5, Veru obviously big pre-market numbers. AMC continues. Plug again, part of that EV idea. Plug, Blink. We'll see how those do. Aerospace and defense, the whole sector. I didn't really need to mention. You guys know better. Aerospace and defense, big bets. Anything related with that, of course. The DFEN being that ETF we were looking at. SKLZ continues. That was a nice position from Friday. And then again, healthcare. Again, I don't need to mention every single fucking sector. If I say value, you know what I'm talking about. Those are all great positions still. Again, we're going to watch NIO and Tesla to see what this EV shindig is. Again, we have the forward position. CLF bouncing back. That's going to need to do a little better. We'll stick with X over CLF for steel. LX continues. Very nice trade. SSYS with that 18 hoofa. Let me bring you over to the IWM here. Holding value here. Big boy numbers. Over almost 2.5% on the open. So obviously big boy numbers. Okay, let's see what we got here. SDC. We'll see trading between the levels in here. Upwork, that trade from Friday, looking very good from the trend line. AMKR, the trade from Friday. Semiconductors. Z, looking very good. Z from Friday. That was a pretty obvious position. Penn, DraftKings. We'll see how these react from coming back into support here. Discovery continues, again, coming into this trend line. This is the next part of the move. With a reaction up here at the trend line. We'll see what happens up there. Chegg getting interesting. We'll see what happens as we'll go wait for that trend line break up here, it looks. Sono continues. Again, this position has been a no-brainer. Don't overthink it. Do not overthink it. Tallow continues. Had some volatility, but you just got to trust in the trend here. OSTK turning. We'll see what happens there. Not yet. Not yet. Open, obviously, from support. That should have obviously just been a limit order placed already in the market. Apps continues. Again, I talked about apps. You have to push this position. There it is. And again, we took a lot of clean energy sort of trades over the weekend. Show you SunPower. SunPower looking, it's at 420 right now. So that's pretty good. Again, you gotta stick with what behind the ideas, right? The other big idea of retail stores. Retail stores looking good to start. Looking good to start today. Go into the week. Visa, MasterCard. Again, these sort of moves. You get the big move the first day after the breakout, and then it pulls back. It's the market. If you're not buying this pullback here, then you're not going to make it. If you can't trade Visa and MasterCard, two of the slowest moving in beta tickers out there, again, they track the market. Visa tracks the market considerably. I don't know what the actual percent is, but it's fucking beta. That's for sure. Doesn't have its own velocity. When it does, it's very obvious, which is why we're trading it now, but you got to be able to take those. Fiverr again. I don't know why we're lagging here, but fucking internet, thank you. Oh, come on. Jesus Christ. You've got to be shitting me.
Market data connection lost. Trading connection lost.
Okay, we're back. Jesus Christ, I'm going to kill somebody.
Trading connection re-established. Market data connection lost. Market data connection re-established.
Okay. Again, retail stores, so things like Foot Locker from this pullback. Again, no, it looks fucking scary to be buying on these candles, but again, those of you that did, and we took these trades,
market data connection
you're getting paid for it. And you didn't really do anything. You didn't do anything. But if you didn't take it, well then, you're even worse. You purposely avoided things. You purposely avoided trades then, which is worse than doing almost nothing. So PayPal, again, these trades, these inside bars, you got to take the trades when they're there. Now, can you go take these trades? Yes. Yes, you can go take these trades. But again, you're not going to be getting the same return, and it's going to be hard to manage. M. Pushing M, right? These type of trades, you don't know where they're going to go, but they've got a real high probability of where it's signaling. BRKB, again, this trade, you haven't been a part of it. Again, you're just... I haven't really mentioned this trade much, but the long-term trade. Long-term trade coming to the upper bound of my target now. You know what that is on options? Go look. Go look. Go look. AMKR looking good. Nova, we'll see how that plays. Etsy from that move last week, sitting on this neckline. We'll see what that does. DraftKings, obviously, from again, if you didn't take the DraftKings and pen trades, then that's a little unacceptable because, again, we talked a lot about it and why retail would jump back on the horse here, and why through the supply you've just got to go take those trades, and especially for the risk on the weekend. I mean, there's almost no reason not to take that trade anyway, no matter where it is. And we've taken the DraftKings and pen trades on the weekend multiple times now. Multiple times. And almost always that risk is going to pay for itself. And so when you have an opportunity anyways, again, it's going to hurt if you're not making some of these trades. And again, it's a compilation of trades. Even this pen trade here is over 2.5%. Look where it is. You have potential upside. Got to make the trade. All you got to do is place that trade. Again, healthcare looking good. Let's see. JMIA is kind of fun down here. We'll see what happens from this bounce. EB, fucking volatile out of its mind. We'll wait for that. BDU, again, all of the Chinese tickers coming out of this trend break look very good to continue. LX from this move here, again, it's been pretty straightforward, right? And then the SKLZ from this trend line down here. We'll see what this does. Pulling back from the open. MP continues. SSYS was this nightmare over here. Okay, let me bring it back to the average. Square Inc. along with PayPal here, right? Moving together. And again, travel, banks, energies. Oh, the net trade, right? The net trade down in here. Taking that net trade, understanding that you're likely gapping through supply in here. Important to see that as well, since that intermediary tech is kind of a gray zone. It's kind of difficult to understand. We'll see. Let me bring it over to the average real quick and place some trades. Okay, there's that. You guys are up. You guys are up a couple percent on your trade. Okay. So again, we're holding value up here. Everything else is picking up a bit. If we look at the dollar real quick, dollar not signaling anything much of yet. So we'll see if there's any direction there. So there's some sort of downwards correlated move. Volatility continues to trend downwards. SPY sitting in this level, everything's sort of waiting, right? Everything's sort of digesting. Everything made quite the gap from open, right? 2.5% on some of these. You don't expect to move from the get-go, right? But it's holding value, which signals further upside, of course. We have a trend line right here, Phipps. I have a trend line right here. So yes, there's supply. And it's important to realize that we gapped to the supply, which is generally what you're going to do, right? That's what a gap is. Usually you gravitate towards supply. And so if we're going to be bid into today, well, we go into the supply. It's got to work through the supply, right? It's got to work through that liquidity, work through the sellers. I mean, this trend line is important. We talked about it. Price needs to get into this for anything else to occur. What we talked about was that value was already within the trend line, which is important to understand that if we're going to be bid from going into today, that this would make the biggest move because it doesn't have to work through supply. And that's why we went with predominantly value. I mean, not predominantly, only. So tech's still not close, right? Is it going to bounce back? Yeah, it's going to trade with the market. Are you going to make as many points here as with value? No, you're actually drowning over here. And we use the ETFs instead of the actual index prices. So that's why, like, when I say the level on SPY is 386 and a quarter over here, that's because we're using the SPY. Because when we look at charts, we like to look at it through the lens of trading. So if it's not something we can just actively trade, like we're not going to trade index options. So that's why we look at the ETFs for each one of the indexes, because it's tradable, right? The Qs, the SPY, IWM, we trade those when the chance is there. So those you also that don't know why we're only always looking at SPY, the Qs, IWM, DIA, right? That's because we're looking at the thing that we can just go trade right now, right? We want to trade we want to look at what we can trade, right? And it gives the exact same, again, it gives the exact same thing, right? It gives the exact same thing, but ties us to the equity market a little bit better. Give me one sec, guys, sorry. All right, so we're coming out of the first 15 minutes. Again, usually we get these first 5-minute candles. Building up that 15 gives us direction coming out of the 15 as the big boys come in. So looking for the move, coming in this last minute or so of the 15, going into 10 o'clock, get some direction. Again, that's a usual sort of price action coming out of an open like this, right? Let's see what we got here. AGTC off that level. Gotta love bio. Gotta love bio moves. Cars continues. It's holding this level. We'll see what that does up here. Again, that auto parts and everything sort of area is an interesting sector. QFIN, again, coming into this week, has been a pretty good ticker to be a part of. Aerospace and defense, again, this kind of move, you gotta say, okay, well, this is the market. We broke out. The market affected our price. You got to be a buyer down here. So JGR just mentioned RTX as well. RTX, aerospace and defense. You got to be willing to take. You got to take those trades on the pullback, especially if it's just because of the market, right? Ryan mentions F. Not much price movement there. Again, healthcare continues. For some of the big boys, Anthem, Unum, you got to be buying those on pullbacks. It's very hard to go trade those on the trends because they're so marginal. REITs continue. TCS, TCS getting caught in all the supply. Be watching for this break here very closely. It got, I think it just got a little ahead of itself, waiting for this next move. And we haven't really broken through this level yet, but I expect some sort of move. Ian Page, we'll see. A little bit tied to the AMD side of things, but looks to be clearing some of the level. I don't know what the fuck's going on with this internet. Dish is a very good call out. Got to get on that bounce. The power of just placing orders in there. Capturing this move here on this candle and not this one. Or just buying it at all, I guess, is better than not, but Ecto's talking about spoofing, and the thing to remember though is that it's not always someone's not always trying to purposely fool you. They just don't fucking know. Just like a lot of us, we don't really know, and so you're placing an order and then you go, no, actually no, and then you put it back in, and then you're like, oh, price is climbing, I better start moving my price up, and sellers do the same thing. So remember, sometimes it's not always someone trying to fool you. They just may not understand themselves. And you got to just be patient. I know a lot of you get impatient. You want to get an order in, and then no one's filling you, and so you're fucking just willing to go pay a bad price. You can't do that. That's your own fault for not putting an order in at the right price or at the right time. You can't then go pay a fucking terrible price, right? Some of you I know, because I used to do it, where you're just like, well, I'm right, and so I just need to get into that position. Just because you want something doesn't mean you can go pay any price for it. It's just not the case. You can't be willing to go pay what sellers want to pay, or sellers are selling for at any moment, right? Unless there's an expectation they're going to start moving their prices, and they are the price. You got to just be patient. It's hard, but again, that's where just being prepared, having your order there already, that few seconds sometimes it takes a little bit of time to get your order in there. That little bit of time you could have maybe already got filled. Okay, let's see. What's Teva giving us? Ooh. Looking pretty good up there on that level. A lot of fun over here in Teva land. Not Antifa. Teva. Nike coming back a little. Spot. We'll see what happens when it climbs back up on top of this level. We'll see what happens. Anthem continues. REITs, banks, energy, the usual. Turns in new. I haven't seen anything new yet. We're still waiting on some of these EV kind of moves. What exactly the plan is there? Let's go take a look at Tesla. Maybe get some ideas of who and what. It's tightening a lot. It just seems like no one's touching it right now, so it doesn't look like there's much of anything to actually see there. In terms of a level, I don't know. It's really hard to say. Really hard to say. Maybe 7, maybe more. But it's certainly tightening, so it catches my eye when it's tightening like that. I'm now up almost 4.5. I don't know what's going. I mean, this internet fucking cops. Today is the day. What am I interested in right now? I think some of you are definitely feeling it. If you didn't buy in on Friday, I have a real fucking hard time right now. I'm not sure what you're supposed to do at some of these levels. I don't even know how you price. Pot stocks, right? Big on pot stocks coming into the end of last week. You gotta be in this. You gotta be in the position. You know, like first, like look at some of these numbers already. GRWG's up 6%. Look at the fucking chart. It's downtrending, but you're up 6%. If you didn't get in here, it's very hard if it starts to move to get into that position. Some of you think that you can go trade it. Like some of you think that when the move's happening, you'll be able to get in there. But so many of these tickers, you're not going to be able to get in there. Even some of you that don't have large sizing, you just won't be able to get in. It's very difficult, especially if it's going to be something that's like hot on the retail side. You gotta get into those positions and be willing to push through some of that. I mean, yeah, sometimes you're a little early, but you gotta average through that position and push through those positions. If it's something that like you're pretty confident in terms of rotation, right? Pretty confident that pot stocks are gonna get some points, right? I'm willing to lose a bit of, I guess, a bit of opportunity during that time while I'm using it, putting funds there, but DraftKings continues, 8.5% so far on the day. X is at 6%. Again, you're going to make those trades. Plug is in, that's an interesting spot. Still not, I just don't know how you enter some of those trades, so I'm not really doing it. Aerospace and defense is going, so again, if you didn't take those trades, this is now up 10%. I mean, it's hard to catch something that's already moving and has already been priced well before. Neo tightening as well. Sunrun, that 68 spot. SPR, obviously aerospace and defense. Again, you got to push that position. GM bounce, X re-entry was too easy. Open dancing on support. What? CWH on that support. That could be fun. Retail stores look good. Chinese tickers are holding their value, which is good in terms of that move. CSPR again, retail stores. If they come into support like this, then you're being given a gift most of the time. Sono continues. ZI is a lot of fun. Those of you that just want quick swing trades, ZI has been volatile out of its mind. Absolutely all over the place. The high to low is 12% on almost every single day. 12% high to low. There's opportunities in there. Those of you that just want to make some quick trades, get some points on the board, make a trade to make a trade, because you're not, for whatever reason you're not able to do something else, well, there you go. ZI is a lot of fun. We're looking for, this is broadening, so there's a lot of questions on charts like this when it's broadening so much, but when the broadening is happening, you can trade within that broadening because there's a lot of uncertainty, but there's a lot of points available because of the spread. So when you're swinging between support and resistance, it's very clear in that sense. It's where it is in terms of a week from now that it's unclear. So you can take advantage of that. GE continues again. I mean, you're going to be silly not to buy some of those pullbacks. I'm sorry, but you just have to be silly. First time, huh? Again, travel looking very good. It's just holding its spot. It's holding its level. All of these gapped. Everything gapped, and so it's taking a moment. Like, look at this, though. We're holding the level here while what? Well, what's going on out there? We know there's a whole bunch of stuff going on in the bond market. People trying to get pricing back, trying to get back into positions. There's a whole lot of things going on in terms of macros. The dollar, people converting back into currency. You've got commodities jumping off. You've got Bitcoin coming back. All of these different things that need to be done. Again, in terms of flows, this is how the flows work, right? Okay, we gapped here. Okay, well, shit. Now I gotta do something else here. Let's take a look at the dollar. Dollar not showing much of anything here. Sitting in the level. Volatility to be expected. Continues to trend down. Continues to trend down. VNet looks very good there. GRWG continues. Again, pot stocks continue. In terms of, think about what's happening right now. It's important to always, we've got the macro look, but then thinking on a smaller scale. What's happening right now? Well, right now the market's trading flat and just holding value. What do traders do when the market's not giving anything and it's just trading flat? Even though it's up on the day, that was a gap. What do traders do when the market's flat and not really doing anything on the average? They go try to trade something else that's going to get momentum. They chase momentum. And by wanting to chase, they cause it because everyone knows that if they go in, they get involved with some of these tickers, then they have a buyer behind them. If you know you have a buyer behind you, you can buy anything. You can buy literally anything. It's like this whole, it's like all these token things and everything else, right? You know you get a buyer behind you. That's all you need to know. The NFT thing, right? You can buy something ridiculous and stupid, has no value, but since you know you have a buyer behind you, that's all you need to know. A lot of these kind of trades, that's all it is, right? Take a look at some bearish type things. We'll see what Uber does when it comes back up in here. Was this a trade you could take? No. I mean, I guess you could use some of the rationale of, okay, I'm going to buy on this pullback. I'm coming into the lower end here, coming into some support. Absolutely. But I don't really consider Uber and Lyft to be a part of some of these ideas. So it's bouncing back because of how fucking bearish it's been. You can miss a few points on something like that. Now, Lyft is different over here. Lyft is you're just waiting for the breakout. I'm all over that if that jumps. And then you could use a convergence rationale for Uber. But We'll take the points when they come. Bud. RTX is through. Again, all the aerospace and defense is going. Those ones, the momentum is a little slower. But it certainly is momentum comparatively, relatively. CV, I mean, all of these value charts continue. Cake, all of the retail stores, right? Especially on the restaurant side. Tech is getting a bit of its bounce. How much of a squeeze? Oh boy. We could be lifting the average quite a bit here, boys. Apple's at 3%. How much is this going to get squeezed? How much fucking exposure is there on those calls? No one stopped buying calls, so all of this here, all of this consolidating is just a bunch of fucking calls being bought. So even though you can short something, it doesn't change the fact that people will not stop doing what they've been doing, buying endless amounts of calls. There's no reason not to, right? Now, will you make as much here compared to value? No. No, tech won't pay you as much. But it does, if we are trending to the upside in equities, then of course tech will move as well. I think this is quite the cute move. Quite the cute move here. Quite the cute move. Gaps with the rest of the market, right? That right there is just squeeze. That's just all options. All options. Even if you're a fund or like if you're a fund and you want to just go get something liquid, right? Like mega caps. Are you going to buy the shares or are you going to buy some fucking calls? do you want to make 5% or 100%? These answers are usually kind of straightforward. Again, those are all liquidity reasons why you'd go into mega caps. Those are marginal trades where you only need to make a few percent on $1 billion to make a lot of money. Whereas on a small position, we need to be getting larger gains on a smaller amount of money, right? Big difference between, and I was thinking about it, I talked to some of you over the weekend about some things. A lot of people that are inexperienced in a lot of the ideas you come into trading comes from media and what you hear from different sources, maybe not specifically like movies and TV shows. A lot of that is all centered around institutions and big accounts and everything else, right? It's not specific to your smaller accounts. You have to be sharper, right? Shorter term trades in terms of getting large percent, right? You can be investing in things, but you can take advantage of the fact that you're small. In and out. The big boys, they can't get in and out. Different style of trading, so you can't use their rationale. DBX. Again, I'm in the DBX trade over here. The levels as we have them are, here. You get the trend line though. Trend line is sort of a what if question right now. Are we interacting with the trend line right now? Or do we get this trend line through here? Right? There's some of these unknowns. This trend line would come in at 23.5. Again, the DBX trade we put on back here on the 23rd. These are the kind of trades that I will get into when I have an opportunity and hold it for the move that will come. SDC is similar, right? You don't get to choose. You don't get to choose when the break happens. All it is a compilation of a bunch of people all betting on the same thing, and eventually there's enough betting that causes the move to happen. Like over here, it's not that everyone, again, it is momentum, but you're not going to get into the trade over here. if you're not already into it. It's the spread keeps widening and going. Your price is going up. To capture this kind of move, you have to already be in the position. Because if this starts to go up right now, you'll never get it. You'll just never get it. Get like 1 or 2 contracts. Those of you that have been a part of these moves, you just have to get in there, and you're not hoping. You're just understanding that in terms of a move happening, it's going to take a bunch of people betting for it to move and get squeezed. And so if you don't get in on the ground floor there, and it starts to build up, and then it goes, then you're going to be chasing. And we don't chase things. We don't chase dogs. Not that this is a dog, but it'd be interesting to see what happens with ORC this week in terms of flows. Out with the move here. Out's always a possibility. Again, REITs. DVN 22.5 up there. We'll see what happens up there. Discovery, going to be an all-time. It's already all-time, so see you later. Blink, nothing yet. Yep, F. You're, again, this tightening, and there's obviously right now, some weighting in the EV side of things, because it's really unclear if you're building a value you're building value into your portfolio right now. Are you considering EV a part of that the same way you were back before? Now that things have changed a little bit in terms of what we just saw, it's not. This is, consolidation. Over here, we certainly were. Over here, we were all EVs were sort of the front runner. Over here, there's still obviously some. This is uncertainty. This is tightening and questions. Now, if it gets starting going one way, then everyone will just go push it. So, in this kind of position or in this kind of situation, you got to go with probability, and the probability is that points will be put on. It's trending to the upside. How many points you're going to get here? Is it going to be better than another position? That's the real question. I'm still willing to have a position here, right? That's just how it's going to be. If you have less capital, well then you get to pick and choose what what hills you die on. Top of the list remains the same. Besides aerospace and defense continuing. X, 9%. Who would have thought it? Really. Oof. TKNG, SPR. RAD's an interesting move here. Something I'm interested in. Getting retail stores. Obviously, I posted the Walgreens chart. This is obviously retail oriented. Take advantage of some folks. Where's the entry? I mean, you got a pretty straightforward trend line in here. Pretty straightforward. Can you take it in here? Yes, of course. Could you have taken on here? I mean, that's kind of gross looking. It's not the same as bullish charts that had a pullback. This is a bearish chart that had a pullback. Little different, right? In terms of being on the rationalized chart trades. Open coming up to the trend line again. That trend line again is about 30 and a quarter, right? Pen is going now again. You can see how that moved from the beginning of the day or beginning of the session here, and now where it is, right? Big difference. And that's again where the difference between you buying there and just buying last on Friday is disgusting, right? It's disgusting because at open you're trying to get that trade and you don't know. Let me put it like that doesn't really help, does it? Maybe we can do it. Yeah, so here's the 1 minute. Here's the 1 minute on pen. You're seeing this at open and you're just look at for 6 minutes, 7 minutes. You're unsure. You don't really know. You don't really know what you're just holding a level like the market. Market's not giving you indication. You got to be able to get that before. Otherwise, now it's made 7%, and if you bought today, then you're at break even. And it feels really dumb to be a part of a position that's up 7% and you break even. Right. It just feels dumb. Because you're right, but you're wrong. at the same time, right? Top making a move here. That's fun. I didn't think about that one. I guess because it was underneath its level or something. I don't know. I have no clue. But I didn't really think about that one. Trend line. Oh, it just broke the trend line, so that's quite the trade. Let's see what we got over here. Get quick. See how you feel dumb? It's up over 7% now, and can try to buy something. Feels great. Very good. Good stuff. Very good stuff. Nothing like telling people, don't you feel dumb for doing something, then you do the same thing, right? Let's see. No NVTA was mentioned earlier. Our different lit charts, lit and lit, look good. M now up almost 6. Again, this is you're getting very close to getting to that point. It's over 16 now. I think the break even on the 16 contracts are like 16 and a quarter. So you're getting very close to exposure getting too high and delta hedging coming in. Big gamma moves. Same with the pot stocks. Big thing with the pot stocks, it's very close to its spot where the exposure gets too big, underlying gets bought. Big boy gamma moves, right? That's what it's got. What do we got in? There's so many fucking tickers that are up. I mean, everything is just up a boatload, so I'm just trying to look for where momentum comes next for some trades I'm not in already. Nothing really to speak of. I mean, everything is green today. Everything is green today. Over here on the sell side are predictable moves. Took profit on FSR at the end of last week. Does this mean it's not going to keep going up? No. Can you take profit here and buy more? Yes. Some of you need to learn that. How you can take profit on something and you sell something and then you buy it. Usually that decision is a very important one to understand. And that's where that opportunity cost idea comes in. Where you can buy, you can take profit on something or sell something and then re-enter the trade based on now that new moment of time. It's dynamic, right? Not every single day and every single thing is the same. This is trending up. Do I want to get a part of this trade again? Yes. Did I want to take home my money? Yes. Feels good too. So, for instance, that FSR trade where I took it at close, right? You gotta be able to do that. And now I can still look at it and say, okay, it's down 8% today, which makes sense. Came about halfway into its candle. Is it offering a new opportunity? It's very possible that it is. I think it's going to need a little bit more time because this is a big move here, but I am definitely still willing to go make a trade there, right? Other than that, though, there's only like 10 or so tickers that have lost more than 1% on our buy list, which is really disturbing considering there's about 1,200 or so tickers on that list right here that we're looking at. So that's kind of gross. That means you're really fucking up. Again, be realistic with yourself. You're really messing up if you haven't done anything. Or if you're just taking a break, that's fine. NWK looking very much like the market up in here, but that's a very big incoming move there. Bring it back to the average, since everybody's getting going here. Coming out of that digestion mode, here's the 10 o'clock candle, right? 10 o'clock comes in, buyers come in. Now we're getting into a trend. Looks like melting. IBM big boy buys, says Brian. Looks like some big boys, yeah. Oh, we get 122 as a level up here. Now, some things that obviously need to be said a little bit about IBM is that, yeah, it hasn't really done fucking anything for a while. This is not one of those ones you preempt. You need an actual break. If you remember over here, this is when I was actually charting short-term patterns for you guys, and now you just know what the fuck they are. But, for instance, on a big boy chart, on tanks or marginal charts like IBM, like some of the larger charts, looking for those candles is very, very strong. So, for instance, a hammer candle. Oh, and then prices up the next day. Doesn't exactly signal a whole trend change. How about down here? Inside bar, next day up 2.5% starts a new trend, right? Now, on these charts, it doesn't mean you're going to get some sharp new uptrend or something. But you can find when trends will break. So when you look over here, it's just nothing. There is nothing. The only time is if there is something and you get levels. So hard to say. But it did sell almost 3%. So it's doing what it's, I guess, supposed to. And the market's up, so I would imagine it's up, but no, not really anything quite as yet. Okay, PRPL is interesting. Again, we were looking for that chart. We took the trade back over here, if you remember. We were trading it through here, and then the market started to consolidate, so we got market candles in here. If this comes back up into the high here, I mean, it already sort of, through that momentum move, was a chance. I mean, I didn't buy it. You had to be, this is like fucking impossible to go catch right there, so. But I'd be a buyer up in this, for sure, even though I've already missed it. I mean, you know, on a chart like that, retail will start to sell and everything else, right? You'll have chances. Travel continues. Let me put it back on this chart and make some trades. Hold on. Dow, 34,000 by April. We got 1 month, boys. Dow, 34,000. What do you think? The bets are already in. Let's go take a look at our Dow chart. I'm going to give you guys some levels and shit on this later. On the DIA. Because it's just disgusting. I mean, you look at this chart for too long and I'm not even sure. Something might actually happen to you. Bad. Something bad. Don't look at that chart for too long. But anyway, looks good. Great buy opportunity. That's why I tweeted out buy. I said Dow 34,000 right over here. Go buy that. Imagine not being a buyer. Oh, God. I can't imagine. This is a good spot. Retail stores. Oh, look at 10%. JWN, yep. So JWN, obviously a part of retail stores. Very good pickup. Very good pickup. We traded it a lot. We traded it a lot over here. And then we took this big move when all of value. We bought all the value after the presidential election. This is the chart that's been consolidating longer. You get some different, I mean, you obviously have a diamond idea in here. These candles kind of fuck it up, but you could ignore them a little bit. Continuation diamond idea. If it breaks here, you got, what do you got? 1, 2, 3, 4, 5, 6, 7, 8. It works. It works. And again, retail stores are all pushing each other. That would be a big move. I mean, you've got all the supply back in here, but it's not exactly, doesn't really stop you. That's for sure. We'll see how dirty this gets. BYND, we're waiting for that trend line. OSTK, I'm not exactly sure what to do with this ticker yet. From the last pullback. You can wait a few, I mean, this is the great thing about this chart, is you can wait a few percent. Not a big deal. 6%, you can wait. GM, yep. I think we've looked at the GM chart. Again, same chart as the Ford chart, just a little bit deeper consolidation. VLDR, okay. I mean, in terms of semis and that whole sector, I think you gotta be a buyer there, huh? I think that's like 10% already. I think you gotta be a buyer there on VLDR. But yeah, we're gonna get involved with if you guys have SPACs that are around like $10 that you see, let me know. We'll trade those. But yeah, we'll take VLDR here. That's a newer one. Traded that before when it was new. Pick up some VLDI. But yeah, I'm gonna be looking for lower volume and then SPACs around 10 as the sweet spot. You know, when I talk about options being $10 and up, or like the sweet spot. Anything below is a little difficult unless it's something like, unless it's like a big chart, right? Big cap size. Yeah, we've been trading iPod. I actually just deleted those trend lines, but you guys remember that those trend lines I drew on this chart, right? This is one where we're already watching. Right? I am watching this one. So yeah, when you guys do call them out, I have been looking at them. I had to delete some fucking lines because Trading View, but know where they are. DraftKings heading to 10. QFin, this pullback here offering another opportunity. I mean, this chart, I think you just gotta. It's hard to. I think you do want to just keep swinging this chart back and forth. Just keep transitioning every single time because of the volatility. Because if you try to put a long position on and just like squeeze some value out of there out of time, that's not really. It's not a good way to take advantage of. Oh God! Let me get some verbiage on you guys. When we talk about the gamma moves that come in here, right? You got to look at some of the timing ideas on this. So you look at some of the higher order derivatives like charm and color, right? Those of you that know what the fuck I'm talking about.
So you add in charm and color, those higher order derivatives to the gamma, and that'll give you an idea of when these moves are actually going to cause an event. And because of that, when you add those all together and you look, it's like 40%, right? If it's over 40%, you're going to probably cause a move on the underlying. That, in the way it happens, means you got to be taking advantage of that moment of time. And every time it squeezes, so you have to transition each time. So you can't like long term it, otherwise you get killed on burn. So Ecto says my brain was mushed by that part of Nadberg. Yeah, the higher order derivatives on the Greeks is I am gonna do a video on the options basics of Greeks and IV because you guys all fucking said so. But I won't go over to like the higher order derivatives until another time. But yeah, it is important. I am gonna, we'll see. But obviously I have a lot of stuff on this whole gamma thing, and so a lot of my research that I've done has been adding in color and charm into that number with gamma and using that percent as an understanding. And I think a lot of other people have done that, so certainly on the right track. When you're asking the question of how many calls does it take to cause a gamma squeeze on an underlying? That's like the most simplified part of the question. There's obviously more to that question, but how many options would it take to actually squeeze something? The closest you can get to like one simple value would be to take gamma plus color plus charm. It's like the most simplified answer, and I've seen other people talk about it a little bit. I don't think anyone has good data. I mean, they have data, but you have like everything is so different that the difference between Apple and this chart and X and DraftKings, there's so many different. There's just, it's too complex to like you. The problem with those is you're trying to average things. You're trying to average things, and other people will do that, but I'm against the whole idea of using averages to make decisions. But that's sort of a me thing. Did you come up with that approximation yourself? Most of the stuff is from myself, and that's why I have like some people would think it's like a contrarian thing, and now it's mainstream though. How mainstream has the stock market is a derivative of the options market? Like how mainstream has that become now compared to me being saying that forever? Getting, So I mean, we all have the same information and data. It's just how we interpret it and use it. Everyone else wants to use average ideas, and usually you need to if you're on the larger side. But if you're on the smaller side, which smaller side being like less than $1 billion in terms of price movement, then you got to be sharper and technical, and you got to be marginal. But I mean, these are conclusions that people are all coming to, and usually this is where you get confirmation of ideas, right? So it's like that is an important part. It is a very important part of understanding, is that you usually are wrong if you're the only one that thinks something, right? That's usually not fucking good. That's why we always cling to these ideas of everyone else is doing something, right? Because if everyone's not doing something, then more times than not, you're wrong. Because we're not. There's no such thing as being like, something that everyone else doesn't know, right? That's not what any of that stuff is. It's the way that we all use the information and understanding this whole idea of getting gamma squeezes. No one has the number. No one does have the number where they understand how much exposure it takes for something to get squeezed. Nobody knows. We just know that through betting, we cause events to happen, right? Through the betting, we cause things to happen. We don't really know. So it's not like I could say, I'm going to go into a ticker and buy, $500,000 worth of calls, and that's going to cause the thing to go up 50% on the underlying. We don't know these numbers for sure, because they're just, it's not so much that it's numbers. There's so many behavioral things with it that you need a certain amount of momentum to get gamma going, and then you need the market makers to respond to that. And through them buying the underlying, more options need to be bought, right? Very difficult, other than we just know it exists. And the big problem there is like the quantum mechanics problem of where when you're actually doing an experiment or you're witnessing something happening, right? This idea of just being there and being a part of it, and whether it is just watching it or you're actually trading it, you're actually changing the experiment itself. And so there's no way to actually get this data other than just to be a part of it, which is sort of the same thing as you got to just trade or else you just have to trade. But that's certainly a big problem with the gamma thing is you can try to get all technical all you want. It doesn't really change the fact that you don't always need to know. It's like the gravity thing, right? We know it exists, but we don't know why. You don't need to go fucking religious boo-woo boogie woogie on it. We don't need to know all the specifics, just how to utilize it and know it's there. Okay, what do we got? 1032. Looking for, let's see. Just holding value still. Not starting much of anything. We are up a lot in the market, but yields are coming down. So we know where some of the flows are going right now. That looks like there was a bit of a delay in terms of everyone was watching equities and then said, okay, we're good, and buy some, let's buy some bonds. Wonder what junk looks like right now. It just looks like it's going to be a melt-up day, guys. Continuation of what we got. Again, it's going to be very hard to trade options if you didn't already trade. There should be no questions of, hey man, what could I buy right now? Hey man, I just woke up. I haven't looked at one chart all weekend. But listen, is there anything that I could buy right now that could give me 100% return by today? I'm in a tight squeeze. And if you don't, then I'm going to piss off because otherwise, what am I doing here? If you're not paying me, then what am I doing here? Paying to learn is stupid. I want to pay for you to pay me gains. Facebook support. Uh-oh. You know what that means, boys. It's up 1.25. Time to short it. It's in resistance, you mean. Time to short it. Look at the open, by the way. Coming in from the close. That's not like the others. The others went this way. You know how I know? Because I've got the same information as everyone else, and I can look at Apple over here. Here's close. Here's open. Here's Facebook. Fuck Facebook. Short it. I'm going to buy a put right now. Real quick one. Real quick. In and out. In and out. Going to get at least 5% here. Looking for at least 5%. Maybe 10. Maybe 10. Let's be a little greedy. See, Trader says he's already inputs.
Okay. I just need to tick downwards. Just like one tick. I haven't got a tick yet. Here it is. We're on our way. If we get to 260, I think it's 10%. $260, it's 10%. I have no downside, by the way. No downside. In and out. Zero risk. T-Mobile, trending up. Retail stores, intermediary tech. Well, I don't know why it looks like this. Why do we have like charts that have nothing to do with some of these others? And looks like AMD or something. But possibilities, I don't know. Nah, it's like it's so hard to see. It's not like other charts where you feel confident buying on the pullback. Where's your trend line in here? The market day here is so fucking strange on this chart too. All of the other candles that are
Market oriented, not from the chart, are down here. This one is, you gapped up. Like this candle here fucks the whole thing. If this candle wasn't here, and this candle is not even bad, it actually gapped up, and then the market pulled it back. If this candle wasn't here, then I would say this is a great buy. You get this like, you can draw it a couple different ways, but you've got this idea of supply through here or something, right? It's the idea through here, and then you can just get sharp through here and say, well, this was a break. This candle is so awkward. There's a lot of supply to get through. So the problem is you have to clear this here, but I would be a part of it. I think you got to clear a little bit, but yeah, that candle does fuck it up. Some of the other ones you can ignore, but this one's right in the goddamn way because this is all supply. There's a bunch of supply in here because of that candle. But if we look at the 15-minute, you can see it. This in here is a lot of supply. Big bodied, blocking the door, but maybe it'll burst through it. Look at that, boys. That's a pretty nice move. Pretty nice. Market's up. Everyone feels happy today, cheery. Good job, guys. XOM's a good call, obviously. Exxon, you just have to be silly. You have to be silly. You just have to be silly sometimes, in my book. If you're trading your own ideas and not what's actually going on in the market, and you're just silly. Disney, yep. Travel again. And again, Disney, we are including Disney with travel and not because of streaming numbers. Because again, even if you go fundamental on me, then go look at the numbers. Disney's losing money on streaming, so try to go fundamental, you're out of your mind. It's all travel oriented, so. It's all travel. And so again, we are considering this travel, and it's been moving like travel. To act like it's anything but, all you have to do is take this trade with the rest of travel each time. What does this look like? Look at the pullback. Look at the move here in relation. Look at this breakout. Look at the trend here. It's fucking travel. It's just travel. Is this like Netflix? You fucking let me know. Let me know if you think that Disney chart looks like Netflix over here. And that it has anything to do with streaming. or if it's fucking travel. Let me know what you guys think. Let me know, okay? See if you can figure it out. But yeah, Disney's a great trade. A lot of fun. Cars is going. Mentioned that from Open. This trend line move here would be like this one. This is the market candle, right? This is a market candle. What does that mean? That we are a lot more fucking bullish than these two candles tell you. That's for sure. On this kind of chart, again, if you don't take advantage of this kind of... This is one of those ones that's just, I mean... You just have to be a player to... I don't mean like a... Well, I mean, yeah, I guess it is like getting laid in here, but you have to be willing to ignore market events or market supply on a chart like this, which is bullish, which we've been talking about, tightening. This spread here is not, even if you went to an average and didn't want to be marginal, this would not be a part of the average. You'd ignore it because of the outlier. So, I don't know. DraftKings, we continue. Again, get the target up here. Coming into the target right now. Does that happen today? That would be like another almost 5%. I mean, that's probably going to happen today. So where does it go from there? I mean, we're all-time highs, so it doesn't really matter now, right? So, again, if you didn't take that move, then it's just on you. It's on you. I even put this in the fucking video that, like, 2 of you watched. VLDR, again, from this move down here. I know it's not moving very much, but I do like that, so I'm a part of that. FLGT is interesting down here as well. Again, healthcare. These kind of trades where this is tightening from a downtrend, you got to take those trades. Apps continue. Obviously, we pushed apps from over the weekend. I told you it's a must push. Gets thrown around in chat a lot. SunPower, we're still pushing. Again, all of the clean energy and things we are using a little bit of story. I mean, of course, it's tightening in here. It's got some converging ideas of levels, and it's in a channel to the upside. We are using some story-driven ideas of, well, what's changed? Has anything changed? Same with the way we're doing it with pot stocks. Has anything changed? No, and so then when we talk about some of the supply, we can be a little bit more forgiving of a bearish move because of what it implies. And that's that there's actually value to be had. So some of them we do use some stories, which, you know what, you don't need to always fucking be a little, I don't know. You throw some rule. I mean, you're still following rules making those trades, but there's certainly some understanding that, okay, there was some overselling here. People don't know what they're doing. That's a fine way to analyze things, in my opinion. GoPro. I mean, always on the table. This level of supply, this whole area, from 8 and up, is golden land in options. That option chain turns gold. Retail stores continue again. All right, let me see. J. Jared mentioned Discovery, Fox, Starbucks, W, Twitter. Yeah. Twitter obviously continues, just trending. Doesn't look like much, but it's still trending. W, Wayfair, looks very good. I like that a lot. Like these moves a lot. What is that? 304.5. Very good. Very good. Again, these like intermediary tech, right? Starbucks we mentioned over here. Again, retail stores on the restaurant side. I mean, you get some pretty cute candles in there, right? Fox, got a few charts out there of these trending, right? It's very easy to look at this and say, well, because it's not as sharp of a trend, right? So it's really easy to look and say it's not as good. But again, these are big percents. Look at the percent that we got in here, right? That's 18% in 2 weeks on a chart that doesn't really move. So
This move over here, based on the supply that we see it, certainly has a lot of upside. I see a lot of dark space up there. Looks like the way to Mars over there. Discovery, I mean, again, mentioned this move so many times that I mean, I don't know what to say on some of these charts. So I didn't tell you, the chart did. What do we got? We got 1046. We're holding the level pretty clearly here. Trending towards the upside. You could draw a line through there. Forward continues. So again, we were part of those trades. The only thing we're looking for now on that EV slide are signals from things like Tesla, the intermediaries like Blink, Plug. If those offer opportunities, which they're tightening, and we'll see them, they'll be clear, and they're probably going to react to the more bullish charts. GM obviously a little bit further behind than Ford. Ford is more of a value play. So what's the difference between Ford and Tesla? Tesla's on the growth side. Tesla has an exponential, so if we go fundamental, right? Tesla has an exponential on its growth. Ford is going to stay the same size. When you get big, you stay the same size because of stability. So they don't have growth on their earnings, right? They just have good earnings all the time. So there's a difference. Why is Volkswagen stock fucking like 10 times as small as Tesla's? Why is Volkswagen the largest fucking producer in the world? Does the best in the entire world. Why is its stock worth fucking nothing? Because it doesn't have growth. It stays the same every year, even though it's the largest provider in the world, makes the most. It's because there is no growth. They keep stability, right? And there's a big difference there. Now, that's how Ford was. But what have they now introduced? They're introducing growth within their value idea, which, again, is now you're sort of taking the best of both while removing some of the negative effects of being stable, which is not a negative, but it certainly doesn't increase the fucking size of your cap, right? You remain just the same for fucking ever because you're just constantly. Again, I know there's movement in here, but these are market events. You're always the same size. You don't get bigger, you don't get smaller. You just keep doing the same fucking thing. Go look at Volkswagen. What is Volkswagen looking to do? Well, they see what's going on. So think about it. Tesla's raising capital like every fucking few months. They're raising capital every few months, and they're now getting new cash on hand because they're fucking public. Volkswagen, they don't get to raise capital. Volkswagen's never doing offerings, right? But they make a fuck ton of cash because they're a good business. But wouldn't they like to get some cash for being a public company? What's the point of being public if you're not raising capital? So what's Volkswagen looking to do? They're looking to spin off Porsche, and they're gonna make Porsche public. One of the most genius ideas that should have been done fucking 20 years ago. But maybe now's a good time to take advantage of what's going on. Why? Because you fucking spin off Porsche, and everyone's gonna go buy that fucker and jack the price up, which is going to be, they're not doing anything in terms of a business. All they're doing is spinning off something. It doesn't cost them, it'll just cost the fee to go IPO it, but they're going to be able to raise a lot of capital on it, right? It's not going to, they're not changing their business. They're not going to make more cars. They're not going to make less. They're not going to make more money. But what they're doing is raising capital through just offering a new fucking stock, right? That's it. That's the only difference it'll be, but they'll be able to raise capital, and people will buy it. People will buy it. And so that's what's happening right now. You have all the SPACs happening. We're going through fucking a massive amount of IPOs. How do you create wealth? Wealth is created by taking a low value asset and bringing it to a higher value asset. You're taking things that again, it wasn't there. It had a small amount of, the asset was worth a very small amount, right? In terms of some of these companies, they don't even get revenue. But you're taking that lower valued asset and making it a higher value asset by actually putting it on the fucking market, right? And now you're creating wealth. It's wealth creation. That money wasn't there and now it is, right? It's true wealth creation. And we always talk about it in terms of the market. That's how the market grows, is by new IPOs. Now through SPACs, which is a little bit easier, through earnings increasing, we use that as a gauge of wealth being created. And so, yeah, it's going to keep happening, right? It's going to keep fucking happening. Now, why is it different from the dot-com bubble? Go look at the numbers. It's not even comparable at all. We're not even close to the dot-com bubble. Every day listing and doubling price every fucking IPO date, and it's not even close. Is it in a bubble? Yes. The difference is that we could sustain it. We could sustain SPACs indefinitely. It is a form of wealth creation, which is different from before, because there's stability and we've got QE and there's money coming in. I'm losing internet consistently. Look at her go. Look at her go. Again, these have a long way to go. You do need the Nasdaq to climb back into its channel. You do need it to for the market to continue on its average. This is going. It's coming. It's coming. It's coming. And again, compare this where these are, everything comparatively, right, to its all-time high. Those are catching back up. If you look at the Dow was was an all-time high, right? It's the closest. It is the closest. So again, do not sleep. Again, the Dow is the real value in terms of larger caps. When we look at the Russell, we're looking at the smaller caps of value. But again, everything climbing together. Apple obviously has a lot of points to go. From being shorted to now possibly getting squeezed to the upside, which, it doesn't need to get squeezed, but it's certainly going to affect the amount of the average, right? SPY and the Qs are going to move. NWK now 10.5, GRWG 11, DraftKings 11. Again, you needed to be in position. Now you're getting confidence because, oh, look, things are up now. You know what? Now I can buy. Okay, that's great. You're not going to make much unless you push it for the next week. You want to make money in one day or you want to make it in 2 weeks? Let's see. Pot stocks are going. It's going to be a lot of fun, I think. It'll be a lot of fun. Sono, holding. My questions now are just managing positions. Where are my transition points and what am I getting into next with that new capital? Certainly some things to take advantage of on this side. But for now, doing very good. Getting confirmation of all of our ideas. What are we signaling? Market signaling all-time high again. That we've gone through that short-term spurt of yields. What's the market looking for? They're looking for, again, I posted the calendar in my channel there. You got some events coming up. The market's certainly looking towards the OPEC meeting in terms of what's going on with fucking oil, because that market is just commodities are booming. Now, I talked about like the super cycle idea a little bit. Certainly that is pushing some of these ideas and all kinds of supply things going on. So we'll see what they do. That could affect the way that we look at value, depending on how the price of oil goes. Currently, it's going up, so everything else is, it's correlated to the upside. Is it, if the price goes down, is that going to correlate to the value going down? No, but we still need to understand some of those things. And also on that day, of course, Powell's going to speak again. We need to. He had talked about just last week or whatever, yields and what would happen if they're up, but now it actually happened. So now we need to see everyone. It's not going to be that he's going to say something new. It's going to be the way that he, again, his tone and the way he speaks about it. Are they worried that the yields went up? What the Fed wants is for yields to be, to keep yields down, right? That's the whole point of what the Fed's trying to do right now. But they knew that would happen because the economy's picking up. It's getting hot, right? So it's technically what they wanted. They want inflation to get going. He's been telling us that we want over 2% inflation to get everything going. But everyone else is dooming and glooming as soon as the yields rise, because it's like, well, what if we get too hot? Like, okay, old fucking wrinkly old men out of touch with the times. Powell's going to just say the same thing. It's good. It's a good sign. And we're not going to change fucking rates, you shitters. How many times am I going to tell you? Told you for the last year, not going to touch rates. But they're worried that yields going up is going to make the rates go faster, which is like saying that the banks are going up because rates are going to get changed faster, which is not true. Banks are just a part of value. They do better when the economy's picking up. More fucking loans. More loans to make as a bank if the economy's picking up. It's a little bit more, there are some yield ideas of, it's what happens if yields go up on treasuries. The cost of capital goes up, which for companies, they turn to banks then. And so banks kind of win-win in these situations. They want higher rates, but they still win in that situation too. Still melting, so looks good for a melt. In terms of this, the Russell gapped up considerably higher, right? Considerably higher. So the move is not as drastic as you see on the SPY, for instance, or the Qs, because those are catching up. JR mentions Planet Fitness again. Let me bring it to the daily. Of course, we took this trade over here. It's in the channel. Talked about a little bit about the channel in here. What does Price want to do? Price wants to trade within the channel. It wants to trade up into the channel here, right? That's what it wants to do. Fun chart. Again, think about how funny it is to tell your buddies, yeah, I made all my money on Planet Fitness. I made it all on SeaWorld. Yep, I was it's not as hot as saying, yeah, I made my money trading YOLO. But money's money. When you pay for the tab, they don't care where you got it from. I've never had anyone stop me from paying a tab. Said, where'd you get that money? Oh, I got it trading Berkshire Hathaway. I traded cat. Yeah, I was trading value. Been value trading for the last 4 months. Oh, that's just not really sexy. I'll pick up the tab. I lost my money on Tesla over the last 2 weeks. Small caps, baby. Small caps. Fuck. Eric Lane. See ya. Where the fuck is he going? Eric Lane from Goldman Sachs. I don't know if you guys know who that is, but he's a big boy. He's a big boy over there. Just left Goldman. Doesn't say where he's going. That's weird. Very strange. I don't know why there's so many people leaving. They had, what's that other guy's name? Omar Ismail went to fucking Walmart or whatever. That meme. Left Goldman to go to fucking Walmart. See ya. That was last week. Wonder what's going on over there. David Solomon must be DJing too much. Fucking Goldman, they're probably making so much money that Solomon's over there fucking DJing all day. And they're like, David, you gotta shut the fuck up, dude. KO. I want to get a part of it. Just waiting. I want to get a part of the big boy retail sort of through that food beverage sort of industry we've been looking at on the value side. But some of the big boy caps, it certainly is in an interesting spot. It's been doing nothing, just fucking nothing. I think. No, I'm being serious because I've been trading the Europe one. Fucking A. Shit, what is it? What the hell is it? KWEB? Is that what it is? Oh, it's CSEP. CSEP. Trading CSEP, right? This is the Europe side. This is the Europe side, some of those other companies on the Europe side. When you look at something like this, right? What is the cap over here? The cap is 24 billion, right? So it's like the smaller arm. But when you look at this, and what is the difference here? We perceive Europe as being a value-oriented market. And so, yeah, it makes sense for this chart to be going. Look at it comparatively. Okay, and then we go to the actual overall. So again, that's like an arm of it. Then you come over here to the actual chart and there's nothing there. So looking for these to certainly give something. Certainly give something. I don't know why I just typed the whole thing there. But when you look at some of these, they're just fucking disgusting. Imagine trying to trade Pepsi right now. Look at this. Imagine thinking this is good. I mean, it's at the lower end here. It's certainly in support, so I'm thinking about them now. You don't do it when it's fucking trending down, but now that it's in the big level of support, I mean, look at how disgusting this is. It's fucking disgusting. Terrible. You gotta be scared. You have to be a little worried. You have to be a little bit worried about getting scooped up. This is prime territory to go get scooped up right now. You're at 130. The chances of getting blown further down. Oof. Be careful down there. On the 5 minute. Give me 1 sec, guys. Quick call. Quick call. No FBI.
Leveling off. Getting lunch vibes. I think there's certainly a lot of waiting for close. A lot of waiting for close, it looks like. Not that there hasn't been a lot of moves, right? But I just mean in terms of, from our understanding of what we've already seen, pot stocks are the thing that I mentioned earlier would get the momentum, because again, if the market's just sort of holding its value, then everyone wants to go trade something that's momentum based. Again, you can see pot stocks going. So again, I hate to take, I'm not going to do the I told you so thing, but again, this isn't, I don't need to tell you. The price is telling us. I'm just relaying what price is showing us. So again, if you're not taking advantage of some of these things, then you're just not paying attention. You gotta stick with price, and when it seems like things are, we get a gap up day, and so it confirms everything from Friday in terms of buying, but then the market's average isn't moving. That doesn't mean that now all of a sudden you can just start chilling and be fucking bored and be like, well, I guess there's nothing for me to do. Again, there's like a mental block there or something, right? If you're not doing anything, if you don't think there's not anything to go look at and learn from, bios, things, there's always something to go do. Whether you need to force it, you don't need to force a trade or something, but there's things that, it's not like, oh, this is boring, I guess there's nothing. I mean, okay, whatever, I guess making money's fucking boring now. Not that anyone's saying anything, I'm just talking to myself. The skills chart looking very good from that entry on Friday. The trend line over here, I'm going to just say it now, it comes in at 37.5. That's probably going to be important for today. That would be quite a considerable move up there. But again, 37.5. It looks like that's probably happening. How was the weekend? I had a good weekend. I was doing a lot of working, so didn't really do anything fun. Not that wasn't fun. I had quite a bit of fun working. Just hung out. Weather was kind of crappy. How would UPS and FedEx fit into the sectors? It's hard to say. It's actually hard to say. I've thought about that. It's not really on the value side. There's not really value to be picked up here, because the thing when we try to categorize it, we have to remember how well UPS and FedEx did during this time leading from sort of the COVID bottom, because of this idea of distribution, which they were players, but again, it's like it's a speculation into the thing, and then as soon as the thing starts to happen, no one really cares anymore, right? It already got priced before it started to happen. Just like we price stimulus, and as soon as stimulus happens, no one cares anymore. There's no reason to speculate on it going up anymore. So FedEx and UPS certainly had their time on that move. So now where are they? They're back to sort of this. They're just the sector itself. This sort of distribution. All of distribution is sort of in the same spot right now. They're in this kind of weird spot where you were speculated on so much because of COVID distribution, and now that it's actually started to occur, you're just back to all technical levels, no sector convergence. There's nothing that the sector itself can help it with. The market can help it in terms of getting bid, but I would say there's no like +1, -1 or anything from its sector of distribution. They are just themselves, which is why these charts are looking a little different now. None of them look at the difference between so again, I'm bullish on the FedEx chart here, right? If you look at the comparatively, this FedEx chart to the UPS chart, watch as I switch this. Completely fucking different. Completely different. Same sector, completely different charts. Other than the fact that they were, in a similar sense, getting speculated as a sector together. So it's important to know that between those two, there's not really a sector or anything. They're the same sector, but there is no convergence between the two. So that would be what to take away from that for sure. And there's other examples of some of these other distribution companies, and like the CYTK chart, right? I talked about over here that if it breaks here, we're going to get a big move. That would have been very sector specific, right, as well. And we didn't get that, right? We actually did get that, which is the same idea that now this is a distribution kind of company, and there's nothing here happening either, because again, we're just past the COVID thing. We're just completely past the COVID thing. At this point, there's no speculation that can help anything with COVID. Nobody gives a fuck. Like, to be blunt, nobody cares. There is nothing to gain anymore from stimulus, from COVID, like from vaccines. Like, you're not going to see why? I don't know where retail is still trying to act like there's some points to squeeze out of vaccine companies. This shit was over. Shit was a year ago, guys. The speculation started. The speculation's been over, right? Now what the fuck is it? Okay, Johnson. So when you look at this, like, whoa, why didn't they just release good news about Johnson & Johnson? Like, because that's what all this price movement was for. All of this was the speculation of that happening, and once it happens, it happened. That's it. All right. So even when we look at some of the vaccine companies, they're all on different schedules because the speculation happens, and then they get the event happens, and then that's it. You're done. See ya. Now I like where this is getting nice tightening happening in here, and again I'm bullish on this side of things. But it's going to take a moment. Back to technicals. Back to the technical. Yeah, Etsy just is not stopping, right? This move here was certainly not to be underestimated. Once it broke that trend and said, see ya, this neckline is so important to understand from this open here. If we go look at 15 minutes, just look at it's very clear. It's very clear that this line meant something still. Look at all the level in there, all the wicks. Now it's coming into the trend line here. I mean, a lot of volatility, but on a longer term scale, one way trend. The question here that I brought up before, obviously Etsy and Peloton are completely different, but they both were COVID winners and both did well for a similar reason. And we know that Peloton is usually like a day behind Etsy. Are you going to get a move here because of some sort of convergence between the two? So we had this chart here. I posted this chart because you got the breakout, and then the market started to push tech downwards, and Peloton has been a part of this tech idea, the growth idea. This is an interesting play here. If you haven't been able to touch the Etsy chart, this is interesting down here, and certainly something to be prepared for, that you could get a big move come through here, because again, it's more than just, it's an idea, but it's more than that. It's just, look at the fucking price, right? It's the same fucking spot. It's just within a different move. This is on its swing up. Peloton's a little behind. Peloton will likely swing up. It's just how many points. Does it look like this? Because this is significant amount of points. SNDL, the other, yep. SNDL is interesting, with $1.42. Really great pick down here. Those of you that want to get apart from the ground, from the ground level, under $1.50. Absolutely, yeah. I would stick to the larger side. Don't go trade the penny stocks. You're adding in too many variables, right? You're actually starting to add in too many variables when you go over there. Too many bad timings, and you're literally fighting over pennies for no reason other than you chose to go fight over pennies. But Tim Sykes, yeah. Get Tim Sykes on the fucking phone. I'd love to have a little chat. I'd love to just ask him a couple questions. See what he's got to say. Rolling around in the mud down there, exactly. Tim Sykes looks like the kind of hog that'd be rolling around in the mud. His little, feet squeezing the mud in his feet. Puts a smile on his face. With his 5 laptops in the mud. I bet he can oink like any other pig you'd hear. I bet he's an oinker. He's definitely a hog. He's definitely a hog. He is definitely a hog. A closet hog. I think I saw him at CPAC. Is Apple big boy buying? Absolutely. Taking advantage of liquidity. It's just getting squeezed. There's been options on it all. And again, the thing to remember is that it's all options. It's all options. Oops. All options. They haven't stopped. The more it goes down, the more that people are buying, right? You of course taking the shorts and stuff in here, but again, this is not. It's not something to screw around with. The fact is that over here, once that tightening happens, it's just like over here you get tightening. But the thing is that look at where price is now. You've got all of the calls up here, so every time an underlying move happens, you've got more calls becoming in the money. So again, the momentum, it's all liquidity. All liquidity. No one wants to be a part of tech until everyone's on the derivative. No one. It's a good example, I think. Well, I mean, it is the example. People aren't buying tech for shares, buying the fucking options. Buying the options. Not to exercise them. To gain a premium. Why aren't these moving? Why isn't, if tech's going up, why are the other tech companies not moving? Why not? Why not? Why are they just kind of up 1% or 2% like the rest of the market? Where's Facebook at now? Facebook just sitting there. They're all doing the same thing. Why is Apple moving? Because that's where all the fucking calls are. How many calls are over here? Anyone looked? I talked about it here last week. It's disgusting. We're going to break. We just broke the record again in February. We just broke the record volume on options. And we're about to break it again this month. I bet we'll break it halfway through March. When that March monthly date comes up, guys, you're going to get squeezed out of your mind. Your head's going to pop off. Your eyes are going to squirt jelly on their toast, and you're going to have jelly toast. That's how bad the squeeze is going to be from March. It's disgusting. And again, that's where when you ask yourself on this pullback, when you ask yourself, can I buy on this pullback here? It's not a question of just right now. It's, okay, what happens over here on this March monthly date? You're going to get squeezed into that expiration date. And it starts now. And I talked about it. I've been talking about it. That March monthly date is going to squeeze the market. So whether you fucking believe the market's going down or not, you cannot remove the fact that there are more options on that March monthly date than have ever been in history. And that's the reality. It's going to squeeze the price up. March 19th, right? March 19th is the March monthly date for options. And where do gamma squeezes come from? That last week leading into the expiration date. That's the week where everything gets squeezed, because that's when market makers really have to start adjusting based on the gamma. And again, there's some different numbers in there that they take into account, which I mentioned this morning, like charm and color, right? The derivatives, where they can understand the time, and that's exactly why it's usually in that last week. That lasts like 5 days into the expiration. because you're getting into a point on the math where, okay, well, now you need to start to actually, you have to start to adjust. Otherwise, too late. FSR, lots of volume or volatility. Again, I took profit here, but I said this morning that I'll be back in. So, but again, that's how you do it. You want to be a big boy? Well, guess what? You got to be able to realize your gains and re-enter trades. And Don, you still making markets at MFC? Looks pretty good. It looks bullish. FSR, lots of volume. Yeah, there's a lot of volume on FSR for sure. That momentum's going to keep going. That one will be a story of volume and momentum over there for sure. The volume picks up as it gets moving. Very clear. All you gotta do is wait for tightening and then look for direction. Like right now, it doesn't have direction. It's tightened, so we just wait for direction, which way that volume goes. The equation gets really simple real quick. If there's 10 to 1 buyers to sellers, it's pretty clear. Again, retail stores, GPS is back on top of that level. Again, energy. Yep, continues. REITs continue. Chinese tickers holding their value. Healthcare continues. Again, Anthem. Talked about this move again from the support this morning. How hard it is to get it if you miss it. You know what this is, guys, right here? It's not very much on the underlying. I mean, it is a lot, but comparatively to how some of us think of things recently, that's about 7.5% from that entry point. That is a fucking cruise line of percent on the options. Save right underneath that level. Lift, again, I'm talking about it, looking for that very closely. At any point, you get popped through. Be very careful on that one. Of when and where to catch that. That's one of the ones you just don't know, so you just need to be ready. BLDR from yesterday. Very nice move here. Let me show you on the 15. Boom. Boom, boom. VIPS continues again. Very, very clear trend, right? Very clear trend. That aqua chart, right? Not aqua booty, but aqua water. Agua. Brian says Uber, huge gap up. Yup. The gap with the rest of the market, again, you're looking for this level to break, and you're honestly looking for lift with it, right? They will converge together. So you can see they both have the same percent right now. You're waiting for the break. As soon as the break starts, you can get there. Let's see. Again, cruise lines, travel, everything continues. They're just holding value. Not much else going on there today. DVN is through the 22.55. That could be a lot of fun. That could be a lot of fun. Z continues back into the OG trend. Back into the trend. Again, a must buy. A must buy when it's offered to you. Pull back into support. Daily pull back into support. Buy on the next open. Retail stores. Under Armour. Again, coming into the level. I'll time it. Wendy's, I was looking at this chart on Friday, if you remember. Retail stores and the restaurant side of things, again, like REITs, are good. What is the whole downtrend idea in here, right? Just demand going elsewhere? It's silly, but those are charts that will pay. TCS is getting going here. Is getting going. Get some points. TPX. Silly chart. PayPal continues. Looking for the trend line. Trend line's at, I don't know, 279 or so. GE continues again. Aerospace and defense looking very good still. WW came into that 31.26 level. Looks like today's it's gonna make the move. So again, this move from Friday, taking the break, pushing this trade, very simple. Do you take profit right there? No. You can, but you should have already done it. If you were gonna do it, you do it on this resistance. You do it on this resistance from the pullback. Now you're in a new position, or you just push on the same position. Can't do much wrong on a chart like that one, actually. Shouldn't even say anything.
Market data connection
Tesla.
lost.
Coming a little out of the tightening. Coming a little bit out of tightening.
Market data connection re-established.
Mega caps are certainly getting some benefits from being liquid.
Market data connection lost.
Right. Got nothing else to look at. Fucking keep it on the average.
Market data connection
Russell
re-established.
2000's up 3%, so. %3. Dow's up 2. S&P's up 2. Nasdaq's up 2. Coming into Europe, close 1.5% across the board. Crude's climbing again. Bitcoin keeps climbing. Gold, silver, again, commodities getting some bid as the dollar starts to pull back, not showing a break. This pullback here helps. And again, the big thing with some of the commodities is that the cycle's kind of fucked up, right? What's going on with gold? Well, the dollar's been breaking down, but gold's been pushing down with it, right? And of course, we've talked about multiple times when gold technically should have been breaking out. Two times we took the trade. We took it through this area and then through this area, and ever since it's just fucking bearish. There's just nothing there. There's no reason to be stuck in this when all it's done is signal downtrend, right? Gross. And again, but this is a part of what's going on right now is the demand wants to be more risk on than what this has to offer of future potential, right? If you start to even think about some of the percent in here, okay, here's 10% up to 1920. Into 2000 is 15%. You can go make that in a week on fucking value. So the position that you have to grab in there, it's just, again, demand. The result is that the correlation of dollar going down, gold going up, is wrong right now and off because we're risk on. We're risk on in the market. When there's something to eat, you eat it. You're hungry, you eat. Gold is lazy, couch potatoed. Nothing good there right now. And then we had an understanding that
Market
Bitcoin
data
obviously was
connection
stealing
loss.
some of that demand as well, which is completely granted.
Market
Let's look at this
data
chart real
connection
quick.
re-established.
Trending up. Here it is again with the break. Let me put on the log scale. Here's a log scale. Again, continue to consolidate, but look at it's still on this path. You get 100,000. Where? March,
Market data
April.
connection lost.
Here's May 1st. I don't know, guys. It's climbing pretty goddamn quick. Even through these consolidations, the
data
breakout
connection
candles are very.
reestablished.
I mean, the consolidations are just. Look at the consolidations. I mean, let's just be honest. That's some healthy price movement. That's healthy price movement that should not have been expected on Bitcoin. Which is why I want to get involved with the whole, all of these interesting markets out there. That NFT market and everything. Apple bear flag. Let's take a look. Low of the 23rd to the low of today. Okay. It's not that it's too steep, it's the way that the price moved. The problem. The problem is that you change the trend. You change the trend within what you're trying to call the trend.
Market
when you
data
try to-
connection reestablished.
Like, look over here. This, like, flag in here. When you... Oh, Jesus. Thank you, Trinity. Let's, Okay. So... I guess we'll do it like this. It's hard to draw it through here. You've got this for sure, right? You've got this for sure. But you've got some problems with the way that you start this through here. So usually you'd have to draw it like this, right? You have to remove and now what you got is some problems. So see how it doesn't fit very well? You'd have to cut your trend line from somewhere. So if we just look at it through trend lines and not through price movement, it's more of a pennant. It's more of a pennant to start. You would consider it this through here. Is it a bear flag though? Is it a bearish pennant? It's just not. It's if price was coming this way, and again we don't judge anything until it's a breakdown or breakout. And I know you're just talking about is it here? You got the downtrend into here, and then the price movement here, but this doesn't look bearish. It's just tightening, right? It's just tightening. This was bearish. But in terms of over here, maybe it could be. Maybe it could be. But it would need to be this way. And the problem is that you don't have price out there yet. Price didn't, I mean, I know I did it over here too, and you can do it like this. Yes. Yes. But the price movement is just not the same. Go look at like the other bear flags that we have. The price movement is just not exactly there. If you look at the way the price moved, it's just not there. It's a little bit too much sticking around here. It's healthier. And you don't want to be looking at it until the actual thing happens. It's really easy to get, the flags are the ones that happen the most, even to myself, where you start to see a flag move happen. It's like you could say over here that you're like flagging, and then you actually fucking break down. Or, there's a lot of times when these things happen, when it's just what's happening over here. What this looks like to me from just a completely unbiased point of view, and I'm looking at it for the first time or something, this looks like to me that confidence is being built. There's tightening in price, and there's confidence being built. What does this candle right there look like to me? That candle right there looks bullish to me. That's a bullish candle. Higher low, the whole body of the candle's down here, right? You've got a pretty clear candle there, I would say. Pretty clear candle. Anybody know what that candle looks like? Inverted hammer. Now, it's a little more bearish than traditionally, but it's the way that the candles are formed together. It's more of a confidence thing. Now, could it get rejected? Absolutely. That's why you just have to look for a breakout or breakdown. Right here, there's not really, if we're just talking about it in the underlying, then there's opportunity there. If you think about it with the entirety of options as well, you've got this whole downtrend already. It's already been super bearish, and so this already has been multiple days of tightening and consolidating here. You know that the market is here. That's a market candle, market selling tech, but even then it didn't even post a lower low. You got the next day on Friday being tightening. Yeah, it's like break even, but it didn't post a lower low. And what's actually happening here, there is a gangbang of fucking options being produced over here, right? It's a ridiculous amount. And so you know that what's actually happening here is that all the demand is going to the option side, because all it takes is, even right here, there's 4%. There's people probably making 100% on the options that they bought on Friday, right? And so a lot of this, again, is just options. What's over here? What's happening over here and here? It's not the same. Look how quick the moves is. It's not sort of back and forth tightening, right? It's not tightening. It's back and forth movement, which is they're very different things in terms of when we look at things. It's sort of like I don't know if we can use Tesla as an example. There's a few, like, it's just the tightening, right? The converging trend lines, people are holding for less and less time. When we talk about tightening, so like what's happening over here on Tesla, and I think I talked about it a little bit when I was talking about charts with Mobsky last night. Okay, see this tightening in here? If we just think about this in terms of the way that people make decisions of trading, since we have time. So from this candle into here and here, what is the difference between the trading in here and the trading in here? It's the amount of time that you hold a position. You're being quicker. So you're not willing to hold for as long. So you're buying and selling at a much quicker pace. So the broadening, the larger spread here is you're holding for a longer period of time for a larger value. I shouldn't say time, I should say value. But in here, you're selling quicker and you're buying quicker. And so you're actually, by doing so, you're decreasing the spread and you're making price tighten, because every time you buy, you're selling sooner, and every time you sell, someone's buying sooner on both ends. And so it tightens and tightens until, guess what? At some point there, the equation is no longer going to be being tightened. It's going to break one way or the other, and those buyers are going to be buying and holding for a longer period of time, which does cause price to move because they're not immediately selling it, right? This is buying, immediately selling. Selling, immediately buying. Selling, immediately buying. And if it goes to the upside, it's because the buy side is not selling as quickly as the other sell side. They push. It's not always just that there's more numbers. On the big mega caps and everything, it's almost always 50-50. It's 50-50. To buy, you need a seller. It's the way in which those buyer and sellers operate, where you're selling quick, so it causes the downtrend. When you're buying quicker, causes the uptrend, which is two converging trend lines. So selling quicker, buying quicker causes lower highs and higher lows. And eventually that equation cannot be like that anymore because you get too tight and people are making decisions too quickly, and then eventually it turns into something else, right? As the momentum gets going. It could just be one more buyer than seller, but the buyers could be holding for a longer period of time, which makes price go up, right? It's like what WSB wants to do, where they all buy and then hold, but the problem is that everyone already bought. So now you have a problem. It's no longer just 50-50. Now there's just more sellers, even though people are willing to hold for longer. Cars through the trend line finally. Again, a straightforward idea from pre-market. Something that's been talked about quite a bit. Where is it going? I mean, it's going to break the high. Delete some of this shit, save some drawings. It's going to break the high. Pot stock's now 13%. Again, I really wish there was a way that we could know some of these things beforehand so that we could capture them. If only there was a way. All right. DQ looks good. FLGT mentioned earlier. Again, this tightening here, it's like a very similar idea, right? You could say it's a bear flag, but nothing is anything until it breaks out or breaks down. In reality, this is a downtrend leading into tightening, into consolidation that is good for the upside to swing it, right? The bear flag thing is, I think, more obvious. It's very easy to get caught on like a bull flag mentality and to think, oh, this will actually flag and go to the upside, because fucking price usually does go to the upside. Bear flags are not, it's not really something that is going to occur that often on a chart that you're actually bullish on, because people don't trade that way on something that's bullish. It's not like a fake out happens. Usually something causes that bear flag to happen. There's like some fucking level, there's like somehow the supply just completely went the other way, and then it becomes obvious that it's a breakdown occurring. On the bull flag side, it will happen where you're like, okay, this is probably you could say it up here. You could say, oh, this is probably a bull flag in here. But again, it's not, because there was no price movement. There's like this tightening that's happening. Tightening leads to a price move. It leads to a reversal, right? When you're making a move and then reach equilibrium, it's because the equation's changed, and it's going to go the other way, right? Just like over here, if there's price movement in like an actual bear flag, or like an actual flag, there's price movement and then it makes a move, right? It's not like tightening and then, I don't fucking know. There's tightening. The problem with tightening is that it's causing a move the other way. Flags, pennants are where like that becomes the case, but pennants again will break out like halfway, 2/3 through. The thing with the flags is that there's price movement. It's actually bouncing back and forth with a lot of, there's actual price movement. It's not so much tightening that's reaching equilibrium. The reason why flags make such large moves, and when I post a flag chart, there's so much velocity, is because they've been moving through that consolidation with a lot of velocity both ways, bouncing back and forth with a lot of sort of momentum, because every time there's a bounce or a rejection, there's a lot of price movement, which is why when it breaks out or breaks down, it causes a very big move, similar to the rally of before, right? Or like a pennant in here. This pennant here, pennant through here, right? It's now continuing this trend through here, which it did, right? Apps continues. Again, the high coming in. A lot of charts. I would say about just about all the charts that we got, all the positions we got a part of are showing confirmation on the charts. That looks like some fun over there. That's some serious tightening, and that's an 8% candle, by the way. You just can't fucking see it because of how tight this stuff is and how big those candles were. That's 8%. Yikes. Yikes. JR mentions ENTG. Again, market happens. We got to take it into context. And again, semis, these are a little bit part of a different type of semi, but again, newer charts, more bullish. Teva, too many lines. Can we delete these lines now or what? I think so. I was gonna post another chart on that, but didn't really break. Hog, 37, looking 37. FedEx did make that move through the 260. I know we were just talking about it. This chart on its own is very bullish, right? Get caught in the market a little bit. REITs. Nike again. Mentioned the possibilities of down there. Again, swinging it back and forth. You're going to be willing to take trades on these. Going to be willing to take that swing trade. And, you know, whichever and wherever. GLW looks good. Again, Visa and MasterCard were really obvious plays that from, again, pushing into this week. Again, it's 3%, but 3% on the underlying here from this fucking buy is a boatload. Just things that can't be missed, right? You really don't want to be missing things like that. Nothing much has changed. Nothing much has changed since the open, besides some of these other charts that we've talked about that we're going to gain momentum because of the market gapped and just holding value. So that value is there. Perfect. Some people are taking profit on it. Others are buying it. So price is staying break even. These other charts that are gaining momentum were the opportunities today that if you didn't already take them. Now, I took a lot of these because I preempted them, right? I preempted these moves last week, which does offer quite a significant difference. But still, if you weren't, these were certainly buys today if you had nothing else to do. But there's really nothing else to do, so if you weren't already in position. So, you know, you got to play. Okay, OSTK. Are we calling it this level here, or what are we doing? Yeah. This 74.5 thing breaks, we'll go play over there. X, looks like we're going to blow past 19 today on X. I wouldn't be surprised if we even test the high over there. So good job, X traders. Discovery, why are we on log scale? I was wondering why shit looks so weird. Okay, back to linear. Jesus. Discovery is at 8%. Again, I don't know. Fiverr from the trend line. Obviously a very good trade again. Very good trade once again. These charts are going. I'm actually a little surprised they haven't got more momentum during this sort of lower volume time. I'm guessing you're getting it now. That's what I'm seeing. Again, you had to take these from last week or from open today. Absolutely. I would expect that something for the market as it's operating today, where it gapped up such a large amount and is getting sort of bought on a macro side of things, that some of these charts that again have been beat up over the last couple weeks are going to be putting points on during lower volume times like lunch, so melting but breaking through lunch because of the spread. There's just more buyers. There's more buyers, and you lower liquidity, then the buyers are going to cause the spread to go up and bids are going to be jumping ask price. So these moves will happen. And then again, in terms of this week, you got to think about this week as well. There are important things happening this week, so you need to get your shit done now, because what's going to happen? You're going to get neutrality around events. You're going to get neutrality around the OPEC meeting. So again, the whole entire fourth, on Thursday, all of Thursday is going to be a neutral trading day until those events fucking pass. So again, you got to think about your timing, not just of today, but through the whole week. You're going to have, coming into the end of the week, you're going to have some neutrality. So shit's going to happen now, and then you're going to go middle of the week into the end of the week being neutral. Again, you've got OPEC and Powell speaking on both on Thursday, and then Friday you've got a bunch of fucking numbers that matter, especially in terms of what's been going on. So again, all of the unemployment numbers, employment, average hourly earnings, all that shit is. Those things matter this week because of what happened in the bond market and this whole idea of inflation and the stimulus that is coming out. These things do matter this week in terms of our understanding because it changes the flow in which it's actually operating. Right, the flows get fucked up where everything flows at the beginning of the week and then everyone goes neutral by the middle of the week. If you didn't know that was the case, well, then you probably haven't done anything. And you're like, well, I can just trade it fucking later. Oh, I missed another 8% on Discovery. No fucking worry. Diane, grab the fucking wallet. Get my credit card. We're gonna put some money in IB and go buy Discovery. And then you come in at the end of the week and it's fucking pulled back into the trend line by the end of the week. You already missed 500% in the last 2 weeks. You missed 1,000% since November. These kind of things. You fucking wake up. Oh, well, fucking Diane, what do you think about pot stocks? What about the meme stocks? Like, again, you don't get to choose when things get to go your way. Price goes, and then you need to go with it. You need to react, or else you get left behind, and you're sitting in your own piss and shit crying because everyone else is better than you, which they are. Because if you didn't trade, everyone else is better than you, because you can't even be on the scale of rankings. Apps keeps going. Billy's going. DraftKings. I mean, your 10-year-old cousin probably bought DraftKings over the weekend. So if you didn't buy DraftKings, you feel, get the printer, Diane. Print that out for me, will ya? What does that number say, Diane? Plus 100%. Find a new husband, you old wag. What have you done for this family? Rad. That trend line. What is that? 21 and a half or so. I want to be a player over there. Again, Casper Sleep, CSPR was a must as well. Retail stores, and again, who doesn't like to buy a triple pillow top Tempur-Pedic with a free pillow? You get I think you can get 2 pillows for free if you buy a Casper Sleep mattress. In terms of fundamentals, it doesn't get much better. I think Bob's Furniture only gives you 1 free pillow. If anyone's going to give me 2 free pillows, I'll buy fucking anything from you. To be honest. Triple pillow top Tempur-Pedic with 2 free pillows. I'm just showing up to the store to get those 2 free pillows, to be honest with you. I don't think you can short Bob's. Bob's is the jam. Did you guys know that they actually send Bob's Furniture salespeople to China to learn sales? That's a real thing. The training program's in fucking China. They send you to Shanghai to learn how to fucking sell if you work for Bob's Furniture. That's a real thing, by the way. It's a real thing. Those people can sell anything. Those people will sell you a fucking piss-stained mattress if they have to, because you're just going to believe everything they say. If anyone is willing to fly people to China for like a 3-week training course, then yeah. Some of you are going, well, that I doubt if that's real. I doubt if that's real. I'm going to Google it real quick. Oh, I don't see anything. That's not real. Okay. Vroom, vroom. BRM. Very nice trend line break. Some retail presence. A very nice consolidation. This pullback here. Not a flag or anything. No. Just price pulling back with a trend.
broke out of its supply. Again, tilt your head. Tilt your head. You go to support and resistance. Support and resistance, whether it's this trend line, whether it's down in here, it's very similar. I'll just average it here. I'll just average it just to show you. Again, tilt your head, support, resistance, breakthrough. That's a breakout. You've cleared the supply. You cleared the supply. Why do you think it gapped over that? Cleared the supply. Not a bull flag, nothing like that. Just support and resistance. Levels being broken. Yep, Apple continues to go. I see a lot of flash on my screen. There's options out of their mind. Options out of their goddamn mind. Apple's getting really squeezed. There's so many options. And again, it's finally both. The thing to remember about gamma squeeze is that it goes both ways, right? As it gets bought on the underlying, and then take profit happens, it swings back the other way. So there's a lot of opportunities, especially. I mean, a lot of people went long over here, right? That's as soon as the short, like, so for instance, when I take my shorts off the table over here, think about what's like actually happening here. Look at the bid that came out of here, because all of the shorting that came off. And so all of that just swung the whole options paradigm. Again, this is not even tech oriented. None of this is tech oriented, or even whether you're buying here, you're not buying value. It's all, again, options related. Technical, very technical. DD. Dow 34,000 by April. Dow 34,000 by April. It's 12 o'clock. Again, lunch is lunch. Remove some of the price action from lunch from your thoughts. Zoom earnings today. Says JGR. I bet Zoom earnings beat. Does that mean it's going to go up? No. No. I think one of that other guy that had just recently joined, the Southern Tier guy, I don't think he really liked my views on earnings. I think he was a big earnings guy. He already left. I was roasting him about earnings. Listen, buddy, we told you so. There's nothing worse than coming to a chat and then just like having the complete wrong understanding, and you're not very susceptible to new ideas. If you like to lose money, then just keep losing it, baby. What have you done? I critique everyone the same way. I don't even think I said anything bad to him. He was the most active new guy. All of the other new guys are good. They're all quiet. I think they stay in offline mode. I didn't even roast him. FYI, I did not roast him. All I was saying was that earnings don't matter, and then you guys all said the same thing. He probably thought it was a fucking cult because everyone just kept saying the same thing. What are these guys doing? Why are they all talking about the same things? What the fuck is value? Why does he keep saying that? What are these fucking dumbass lines? Why did I just get 50 notifications? Why is there 100 different tickers on this list? I'm on my mobile phone. He's making fun of my greasy fingers. Lick the grease off my fingers. Again, this BLDR move looking very good. And again, if the reality is, again, there are a lot of charts out there that I would. Again, I don't know what trades you're in unless you tell me, but if you're not in some of them, for some of you, then I would definitely be a little bit worried. A little bit worried at this point. I know a lot of you are in the X trade. I know a lot of you. I don't know how many of you are in the DraftKings chart. I don't know how many of you picked up pot stocks. Aerospace and defense is an iffy one because I can't imagine many of you bought on the dip on Friday. That's a tough one, but you had to do it. There's some questions out there. Yeah, AAL, we'll see what, so again, for lunch, could certainly be a nice opportunity here for some of you. As this comes into support up here, certainly a buy opportunity. Now again, you got to compare the whole sector when you're looking at some of these. See everything moving together here. Very important in terms of understanding all these charts. Who's the leader? What's going on? We're hitting our head on some charts. Remember the moves that they've made, and remember where they are. Not just on the movement, but where they are. AAL is up 2.5% even after that move there. If it comes into the trend line, it's still going to be up 2%. You gotta keep some of these things in context because again, those numbers do matter. It's one thing to be like, oh well, you know what, travel was down today, but then when you look at the number, it's like, no, actually, the whole average of travel right now is up 2.5%. So just because it's red, you gotta remember where you started and where you are now. Can I get Apple at 420%? The next level that you're looking to clear would be what? What is that in there? 126.5 or something? I have no clue what. It's all in the options. You just gotta look at the chain. It's very hard to lose money on that. Again, no one should be going like. The value thing is like the most obvious thing in the world. Obviously, at this point. In terms of going into tech, though, if you go into the options on the mega caps, it's very hard to lose money on options on mega caps. There's just fucking people buying. What happened on the underlying? Who knows? Who knows how many points it gets to put on? You know what happens if there's a bunch of call buying. But again, it's like saying, well, I'll just go buy Amazon right here. Let me just go buy Amazon. Yeah, you guys have been saying you're going to buy Amazon here, and I told you every single day not to buy it. It's the same thing. No one wants to go here. Now, could all of the fucking option buying from all the same monkeys buy, and chimps or apes are strong together, cause the price to go up? Absolutely. And if the market's trending to the upside, mega caps, of course, will be a part of that picture. The problem is, again, that you have a fucking giant supply. Here's the thing to remember about what's happening with all the options buying, okay? Yes, a gamma squeeze, like what's happening on Apple right now. Apple's moving because of all the options buying, right? You do not see gains on your options just because everyone's buying until the underlying starts to move, which, for instance, is a fuck ton of calls being bought in Amazon, but that's a big supply of calls, which means you're not making money over here. You're not making money over here. It's not until that causes a squeeze on the underlying that you start to get paid. So you could have hundreds of thousands of different calls being bought, and it's actually making you lose money because you're increasing supply, because the supply is going up, meaning more people can sell in a speculative way, which means that until that move actually gets going and that gamma idea, that acceleration starts to actually occur, you're losing value every time it doesn't. Every time it doesn't move, you're losing value because all you're doing is you're getting a bunch of chimps together buying the same thing, which is not increasing in value because the gamma's not increasing. There is no acceleration. Could take a fucking month and you might be expired by then. So again, sort of what's happening with Apple here, it's a quick move because of what's going on. We went from this short, everyone removed the shorts, the tightening, everyone buying calls, underlying's not moving. And then, of course, what's happening here, it's pushing that underlying to move. What's going to happen here? Everyone buying here is probably losing money. Everyone that bought probably above. Anyone that bought maybe maybe 30 minutes into the day is probably not up. Probably not up when you think about it. Because as soon as this loses 1%, these are now on the option chart lower because you lost acceleration. It's a tough trend to hold. You need twice as much option buying. Roku, obviously, big boy chart. We want it. Get us involved. If you didn't buy Roku, yikes. Get us involved. We're climbing back into the channel, baby. Climbing back into this channel. Transpose supply. See ya. Bring us back. I'll probably post this chart. I'm going to just make some lines up and you guys won't know the difference anyway, so. You guys don't know the difference if I just draw some random fucking lines on there. You just see that I draw it and you're like, oh, good. Looks pretty good. I'm just kidding, guys. I love you, okay? Don't feel bad. Those of you that I've called monkeys and dumbasses and you're a moron and you're stupid, remember, that's because I enjoy your presence, okay? Nothing personal. Nothing personal. But for instance, some of you are certainly missing a lot. A lot of days out there, though. A lot of days. You guys are up a few percent on your trade so far. Looking good. Really not the greatest, though. I'm surprised you're not getting that great of a move, you know? I don't know. I think you're doing pretty well. Looks like quite a few percent over there, huh? If only you bought Marches, you know? Just kidding. Why does it say on the... Oh, right. You guys are what? On the trade, you guys are up, I don't know, like 40%. But on the portfolio, it looks like less because I have that, the extra cash in there. I'm like, why are you guys only up a few percent? I'm a fucking moron. I'm an absolute moron. Forgot I put that in there. You guys are up what? You are up. Right now, you are up 30%. 30%. That's your first successful trade. So that's $724. You're at $2,700. And then you've got what, like an extra $100-something cash there, so you're at like $2,800. So you're still down like $400 from the start, but it looks like you're about to climb back, right? You're pretty close. Pretty close. So you're almost back to break even. Pretty good trade, though. Pretty good trade. This Etsy move again is pretty interesting. You gotta think about Peloton, think about Zoom a little. I mean, some of these again are just dictated by the market going to the upside, right? And some of them have a lot of volatility. Some of those with higher IV, extra demand coming in from the market could be enough to really send some of them, sort of like what Etsy did, right? Etsy with some higher volatility, get some extra demand and see ya. I mean, there's so many charts over 5% today, guys, that certainly could have got a piece of anything here. Not many charts are down, not barely any. Russell's heading to 3.5. I mean, even tech again is catching back up. Has a, again, Nasdaq is really took a beating, so it has a lot of points to retrace. Oh, there goes the fucking internet. Has a lot of points to retrace. It's a lot. Should climb back in if we're going bullish. Had to buy anything. I think we're going to take a break for lunch. Not much to see here. I mean, again, what was today? Today it was really just a day of entries from the end of last week, buying on fear, and now just managing positions this week. Besides maybe a couple momentum trades, understanding that we were going to be a little flat today, that you could have taken if you were already in position. Not much to do today, other than just to be in position. There are potential transition trades coming up in terms of managing the trade. But in most cases, we're just pushing everything. We're not going to overreact to anything during lunch. We are looking for all-time highs to push trades. Otherwise, we are looking to transition on trend lines if we don't continue sort of the pace, then we're going to understand that just like here last week, right, where we bounced and came back up, then we're going to be realizing our gains. We're not going to sit in the trade if we get any vibes that we're not going to continue the move. So, for instance, tomorrow, let's say we gain up to the trend line here, but then on Wednesday we start to sell. Maybe that's because we're going into OPEC and Powell speaking and the numbers on Friday. Then we're going to take off the position. We're not going to leave it to chance. We're not going to let the market decide our fate in terms of our position. If we're up fucking 50, 100%, then we're going to take the gain there when there's uncertainty. Sort of like here, right? We transition on the trend line and we'll buy more if the chance is there. No problem. I'm fine with it, right? Because again, the difference here is that if you got all your money working for you, then that gain, you can't say, well, you know what? I'm going to risk all my gains for a few more percent when you're just getting started on this move. Capture that short-term gain while you can. If we need to transition, and if it keeps pushing and trending, then you don't need to stop. There's nothing you need to do. You just keep pushing the position as it trends. So we're playing for both things, but we are respecting that there are events this week that there's going to cause some neutrality. There's going to be charts that if you're not in long terms, right, if you're in Marches, sometimes in some cases Aprils if you're out of the money, then you're going to have to take profit on those quick rejections because you can't lose those points. So you guys know if you're in short-term positions or longer term, and you'll be able to push through things and through this week accordingly, right? So enjoy your lunch, drink some water. Very nice day so far. Good confirmation. I think close will be a little bit more, action-packed. Obviously, we gapped up, held value, are just melting. Nothing really exciting, but that should be a good day for most of you. That should be a good day, and that shouldn't be a bad thing. So I will see you guys at close. Enjoy. You need something, let me know. Have a good one.